Are you all able to hear me? Perfect. Perfect. Yes, very good evening. So, yeah, just now the live has been started. So let's begin with expected questions revision. As I already told in the day before exam revision strategy video, today, right now, the next 2.5 to 3 hours, maximum I will try to finish within 2 to 2.5 hours itself. Worst scenario, 3 hours. I will try to finish 30 to 35 marks, 30 to 35 marks worth of chapters. Like this we will be revising: nature, objective and scope of audit, ethics and terms of engagement, documentation and bank audit. So tomorrow we will be revising all these topics and day after these topics. Okay. So today we will be revising these topics at first. Now, okay. Now before let's take let's take a challenge. Next to 2.5 3 hours, no deviations, nothing. Don't worry, in between I'll give some 10 to 15 minutes break. Don't worry at all. I am concerned about your productivity the most. Okay. So in the next 3 hours, I will give you 10 to 15 minutes of break as well. Now, let's begin the expected questions revision with respect to the first chapter, nature, objective and scope of audit. Further, I already have uploaded various marathons. Okay, you can scan here this QR code or you can just click the link here. Very simple. By the way, where this PDF is available, I already clarified in the previous video, day before exam strategy, but once again I'll tell you, go to our website restofuscacma.com, click on free resources. The first CA Inter, the first folder is there, expected questions, all time high scoring topics. Open that, P5 expected questions file will be there, that itself. Okay, now so first chapter, nature, objective and scope of audit. So first one in that, what I have to cover, what we need to cover is what are the various aspects to be covered in the audit. If at all you are already following my material, well and good. If not, if at all you are following some other material also, no problem at all. The concept is at the end of the day same. Look at the observation points which I am going to select, the points which I am going to cover, that is most important. Now, so what are the aspects to be covered in audit? This is the one which can be directly asked as a 3 or 4 marks question. 99% 4 marks question. What aspects we cover in audit? What aspects we cover in audit? First we need to check whether the financial statements are conforming with books of accounts or not. Then we need to check, see, books of accounts, no. So first thing we need to check is what? Financials, because we need to ultimately give opinion on financials. Are they matching with books? Then books of accounts means what? Journal entries. So journal entries we need to check. Journal entries, are they supported by? Journal entries must be supported by sufficient appropriate evidence. So journal entries must have proper evidence. Third one, there should not be any omissions, there should not be duplicated entries, there should not be fictitious entries in the financial statements. Auditor has to ensure that. Then auditor should also verify whether the information presented in the financial statements, are they clear, are they without ambiguity, are they clear and unambiguous. This auditor has to verify. Fifth one the auditor has to verify is what? Whether the amount, classification, presentation and disclosure, yes or no, are they comply with accounting standards or not. If you recollect misstatement definition, no, mistake can happen in any 4 items. It can be amount, it can be classification, it can be presentation, it can be disclosure. In any of these 4 items misstatement can happen. Therefore auditor has to check whether these 4 items are complying with accounting standards or not. Ultimately, whether the financial statements are presenting true and fair view of the results, operating results, assets and liabilities of the entity. Once again, what aspects we need to cover in audit? First one, every one of you should repeat along with me in your mind. Okay, whether financials are agreeing with the entries in the books of accounts. Second one, whether journal entries in the books, no, are they supported by sufficient appropriate evidence. Third one, there should not be any omissions, there should not be duplications, there should not be any fictitious entries, yes or no. Then fourth one, the information presented must be with clarity and without any ambiguity. And the amounts that are shown in the financials, the classification, presentation, disclosure, they must be in conformity with accounting standard, and ensure that the financial statements are showing true and fair view of the state of affairs and assets and liabilities and operating results of the entity. That's it. So with this, the first expected question is completed. Then what is the next expected questions? Aspects to be covered in audit, just now we completed. Then the next one, what is included in scope of audit? First of all, what is scope of audit? What are included in that and what are excluded from the scope of audit? Now look at so directly we'll go to the scope of audit concept. Okay, scope of audit. Remember, first I will cover expected questions, then I will come back and cover any other questions which, if at all I feel something important, that also I'll cover. Now, what do you mean by scope? Scope means what? What is covered in the audit. Scope means what auditor will do as a whole. Okay, scope refers to range of something or reach of something. Scope means range or reach of something. Very important. Scope means range or reach of something. The purpose of an audit is what? Ultimately, it is to increase confidence of the users. How we can increase confidence of the users? How we can increase their confidence? By giving a report. What the report will contain? Opinion that be expressed. So, the auditor expresses an opinion whether financial statements are prepared in all material respects according to the applicable financial reporting framework. By giving this opinion, we are increasing the confidence of the users. We are enhancing the confidence of the users. Now, so third one, the framework is used for preparing financial statements that should be acceptable based on the entity's nature, based on the objects of financial statements. What is financial reporting framework? If someone asks you what is applicable financial reporting framework, based on nature of entity and objective of the financial statements, whatever framework used for preparing the financial statements is called as applicable financial reporting framework, and this financial reporting framework may be required by law. Okay, it is generally required by law, or it depends upon the nature of entity and objective of the financial statements, and this particular framework is called as applicable financial reporting framework. What is a framework? First of all, framework means set of rules and regulations. Then, example, in India, companies follow financial reporting framework as per Schedule 3 Companies Act. That's it. Now, what scope of audit includes? Before I talk inclusions, first let us look at exclusions. What scope of audit do not include? What it do not include? Important for MCQs. Okay, the scope of audit exclusion is important even for MCQs purpose. What is excluded? Auditor is not expected to perform tasks outside their competence. For example, determining physical condition of asset like machinery, assessing suitability of life of buildings. These are something which has to be done by qualified engineers. Auditor cannot do. We don't know whether a building is in good condition or bad condition. We are not capable of checking machinery is in good condition or bad condition. We can only see external looks of the machinery and say whether it is good or bad. We don't know whether a machinery is performing correctly or not. Therefore, some activities are outside the scope of the audit. This is not as part of our audit. This is not our duty. In all these cases, we take the help of experts. Next, the auditor is not an expert in authenticating documents. We are not experts in verifying documents originality. Yes or no? Whether a document is original or not, we are not experts in that. He cannot verify genuineness of documents because it requires specific expertise in that particular field. So verifying document whether it's original or not, it's a separate exercise altogether. And remember, audit is not an official investigation. We are not doing investigation. Audit does not include investigation. Investigation is not in the scope of the audit. Investigation is about a particular subject matter. In investigation, the objective is establishing a fact. Suppose in a company theft happened. Who did that? So who is the thief? How much they did that? How did they did that? If at all we need to do a detailed verification of that, that's called investigation. Audit is not investigation. Then what is audit? By the way, auditor, no, we don't have any legal powers like searching or recording witness documents to conduct investigation. No, we don't have powers of search and all. And audit and investigation, they both are different. Investigation involves detailed examination with a special purpose, such as checking for fraud. If a fraud is suspected, it turns into an investigation. It requires a person to do investigation so that what exactly happened can be discovered. And remember, ultimately, what is the objective of audit? Our objective is very simple. Our objective is to obtain reasonable assurance that the financial statements are free from MMS due to fraud or error, therefore allowing the auditor to express an opinion thereon. Now once again, what are excluded from auditor's scope? See, how are they telling this? What is not covered in scope of audit? One, auditor is not expected to perform duties outside their competence. We don't have to perform anything outside our competence. For example, machinery condition assessment, life of building assessment, these are all requires engineers. An auditor is not an expert in authenticating document. He cannot verify genuineness of a document. Audit is not an investigation. Auditor does not have any legal powers like search, witness, recording on oath, examining a witness on oath. No, we don't have that powers. And what is the difference between audit and investigation? Investigation is a detailed examination with a special purpose, like checking a fraud. General investigation is requested. Investigation is conducted at the inception of any fraud finding symptoms like that. So then what is audit? Audit objective is very simple. We want to obtain reasonable assurance regarding what? Whether the financial statements are free from material misstatements, whether these mistakes are due to fraud, whether these mistakes are due to error. So auditor have to obtain reasonable assurance, and thereby we can express an opinion thereon. So this is what scope of an audit excludes. Then what it includes? Scope of an audit includes what? We should cover every aspect of the entity in our audit. We should cover all, the audit should cover all relevant aspects of the entity. For example, auditor has to check financial information whether it is reliable and sufficient or not. The auditor reliability you need to check. The auditor must ensure underlying accounting documents, the books of accounts and other source data like bills, vouchers, documents, they are reliable and sufficient for preparing financial statements. See, based on what source financials are prepared, are they reliable source or not? Are they authenticated, valid, proper, are they reliable or not, trustworthy or not? Then assessment. The auditor evaluates the reliability and sufficiency of information by studying accounting system, internal controls and performing tests and procedure. How do you know whether books of accounts are reliable or not? You first understand what books of accounts company maintain. Accounting system you observe, internal controls you observe, you test those records, you verify those records by performing inspection, observation, physical verification, something you do. By testing that, you will get evidence on reliability and sufficiency of financial information. This itself they can ask as a 3 marks question in exam. Write about reliability and sufficiency of financial information. So the auditor must ensure underlying accounting records and source data are reliable and sufficient for preparing financials. The auditor will evaluate reliability and sufficiency. How do you evaluate reliability and sufficiency? How do you know whether they are reliable and sufficient? By studying accounting systems, by studying internal controls, by performing appropriate test of those records. Then another important thing, auditor is also concerned with the proper disclosure of financial information. This itself can be asked as a 4 marks question. This itself can be asked as a 4 marks question. We are concerned about proper disclosure of financial information. What do you mean by proper disclosure of financial information? The auditor, he has to verify, he has to ensure whether relevant information is properly disclosed in the financial statements, considering applicable statutory requirements. So accounting standards, legal financial reporting framework like Schedule 3, look at all those and see whether the client balance sheet P&L, are they disclosing relevant financial information or not. So the auditor has to ensure relevant information is properly disclosed in financials. The auditor ensures financial statements properly summarize recorded transactions and events and evaluates management's judgments made during the year. So the auditor has to verify financials, are they properly disclosing recorded transactions, whether the balance sheet P&L, are they disclosing whatever transaction actually recorded, and evaluates management judgments. Management judgments mean what? Management, they make many judgments such as choosing an accounting policy, determining life of an asset, determining an accounting estimate, accounting policy, so many, yes or no? Now, so these accounting policies you should evaluate. What you should evaluate? Accounting policies. The auditor evaluates whether these accounting policies are appropriate, whether whatever accounting policies followed, for example FIFO method followed by them, is it right or not, is it suitable in that business or not, whether goods are going in FIFO order, then FIFO method can be used. So see whether that is properly followed and applied consistently over time. So we need to see accounting policies, 2 things we need to see, whether they are appropriate, 2, whether they are consistent. 2 issues we need to verify with respect to accounting policies. 1 is appropriateness of the accounting policy, 2, consistency of the accounting policy. Then there are many who are watching, just like the video, it will be recommended to many other students also who are in need. Okay, so almost 250 plus students are watching in live, but only 78 students liked it. Okay, see how much effort we are giving. So if you really like this video, just like the video also. Okay, fine. Next, auditor. So proper disclosure of financials. Now the auditor understands that financials are based on historical financial information which reflects past economic events or conditions. So look at The auditor understands that financials are based on historical information, which reflects past economic. Obviously, what are we auditing? Are we auditing future financials? Past financials are past. Historical means past, which talks about past economic events and past economic conditions. These are the issues that we are focusing on. So, proper disclosure of financial information. What does it mean? This was asked many times in exam. 4 marks question. Proper disclosure. Auditor has to verify relevant information is properly disclosed in the financials as per statutory requirement. The auditor ensures whether financial statements are properly summarizing the recorded transactions and events. Remember, trial balance is a summary of transactions and events, yes or no, and evaluate management's judgments made during the year. And managements, what are management judgments? Management makes so many judgments, like choosing an accounting policy, all that. Then for accounting policy, what auditor has to ensure? Whether the accounting policies are appropriate, whether they are applied consistently over time. Then the auditor understands that financial statements are based on historical financial information which reflects past economic events and conditions. Now here, there is one exercise you need to do. Once we complete a chapter, expected questions, once we completed a chapter, okay, you have to read it once. You have to read it once, or else we can do one thing. Once I complete this part 1 revision, which is of almost 3 hours, right? Once I finish this tonight, 1 hour you should sit and once again read this. This is a revision of the revision. So if you do a revision like that and immediately read again on your own, after covering this revision, if you read once again on your own, I will, believe me, your remembrance level will be very, very more, and tomorrow you can perfectly write the exam like anything. Okay, that's it. Yeah, next. So that's regarding scope of audit, what it includes, what it excludes. Okay, so I hope you are confident on scope of audit. Then the third expected question, inherent limitations of an audit. We have totally 5 limitations. Inherent limitations, we totally have 5 limitations. And remember, these inherent limitations, they can be asked as, just a minute, they can even be asked as a straight theory question, or MCQs are possible. Anything can be asked from inherent limitations of an audit. Now look at inherent limitations. What is inherent limitation? Audit process has inbuilt limitations. Certain inbuilt limitations we are suffering from, where the auditor cannot obtain absolute assurance. Remember objective of audit. What is the objective of audit? The objective of audit is to obtain reasonable assurance whether financial statements are free from material misstatements or not. So the objective of audit is to obtain reasonable assurance. So we cannot obtain absolute. Why we cannot obtain absolute? Absolute means what? In financial statements, each and every rupee 100% accurate. That is absolute assurance, which is not possible for the auditor. There are 5 reasons why it is not possible for the auditor. Why auditor cannot get reasonable assurance? There are 5 reasons. Now find by the way, so the audit process has inbuilt limitations. Auditor cannot obtain absolute assurance that financial statements are absolutely free from material misstatements due to fraud or error. Why? Because of the various limitations. The first and foremost limitation, financial reporting itself, books of accounts itself, accounting records itself, financial statements itself, financial reporting. You should write nature of financial reporting only. You should not write financial statements. You should not write books of accounts. No, nature of financial reporting. Financial reporting itself is a limitation. Forget about audit. Reporting itself has a limitation. What limitation reporting has? Preparing financial statements, they involve many judgments by management, which may be subjective decisions. In books of accounts, depreciation and all is prepared based on useful life of an asset. Useful life itself is an accounting estimate. That itself is not 100% accurate. Now tell me, when life of the asset itself is not 100% accurate, depreciation itself is not 100% accurate, how can I certify balance sheet P&L are 100% accurate? What is absolute assurance? Balance sheet P&L are 100% accurate. This I cannot do. Why I cannot do? Because the very balance sheet P&L itself is not 100% accurate, because preparation of financial statements involves judgments. Preparation of financial statements involves judgments made by management, which may be subjective decisions or high degree of uncertainty. Now remember, management is responsible for preparing financial statements in accordance with applicable financial reporting framework and ensure effectiveness of internal controls. Yes, that is their responsibility. You might have seen this point even in preconditions to audit. Don't worry, in ethics topics and terms of engagement topic, what is preconditions to audit, we will be discussing. So management is responsible for preparing financial statements in accordance accordance with applicable financial reporting framework and ensuring effectiveness of internal controls. These internal controls may not always be reliable. Yes, internal controls are also not reliable. They are not 100% dependable, because these internal controls are also subject to limitations. What are limitations in internal control? You have this in risk assessment and internal control chapter. You know, lack of understanding the control, human intervention. Yes or no? Like there are so many. That's it. I already told at the beginning. Okay, today we will be covering 4 topics: nature, objective and scope of audit, ethics and terms of engagement, bank audit, documentation. These topics will be covering in this particular revision now. Next, what is an example of inherent limitation? What is an example of internal control limitation? Suppose a company may require purchase bills reflect the stamp and signature of the authorized person, indicating that goods were received. However, if the accountant and authorized person collude, they can override the control and create a dummy document. Even though goods are not received, they will show that it is received. So persons can manipulate. Collusion, that is also one of the major limitation. Next. So, nature of reporting. Nature of reporting means what? Financial statements preparation involves judgments, which may be subjective or degree of uncertainty. Management is responsible for preparing financials in accordance with applicable framework, and they have to ensure that they are liable for effectiveness of internal control, and these controls may not be reliable. Because of these reasons, the financial reporting is not 100% accurate. Because financial reporting itself is not 100% accurate, I cannot certify that they are 100% accurate. This is the first limitation. This itself can be asked as a 3 marks question or 4 marks question. Nature of financial reporting is a limitation. Next, second limitation, nature of audit. Audit procedure, the way we do audit itself is also limitation. There are 2 types of audit limitations. Audit limitations are 2 types: practical limitation, legal limitation. Legal limitation means what? Suppose management is not providing complete information requested by the auditor. I was appointed as an auditor and I'm asking the management, please give me data, please show me purchase records, please give me sales records, all that. I will verify whether purchase and sales are true and fair. Management is not giving me the records. Can I force them? I cannot force them. Can I beat them? Can I force them? I cannot. This is a legal limitation. So management may not provide 100% information which auditor is asking for. The auditor cannot force the management to provide this information. If not provided, if at all management is not providing, what we can do at max? The auditor can only report it. We can only report that matter, and this is a legal limitation in audit. Yes or no? This is a legal limitation. So they will ask you in exam, there are inherent limitations in audit. One of the inherent limitation is nature of audit procedure. Nature of audit procedure involves practical limitation, legal limitation. Give with an example. Nothing but write legal limitation and write this matter. That's it. And practical limitation, write this matter. That's it. Practical limitation. What is practical? Auditor obtains evidence by performing audit procedures, but he cannot test all the transactions or balances. Look at Reliance Industries, look at DMart, look at these big companies. Crores of transactions. Number of transactions are more than 1 crore, 2 crore. How many we can verify? This is a practical limitation. Auditor cannot test all the transactions. This is a practical limitation. We do testing based on sampling only. We will not verify 100% transaction. Instead of verifying 100, what we do? We form our opinion based on sample, which is a practical limitation in the audit. So what is a practical limitation? We understood. What is a legal limitation? We understood. We also saw the example here. Then remember, management is dishonest sometimes, or they might be involved in fraud, or they may design sophisticated schemes in order to conceal the fraud. No matter how level of efficiently you do the audit, no matter how in-depth you do the audit, no matter how with what kind of efforts technology used in audit, still some frauds and all you cannot discover because management is hiding them. They might present fabricated documents to mislead the auditor, causing the auditor to accept the evidence even though it is not valid. This is a practical limitation. And remember, the entity might engage in paper transaction. Paper means what? The transaction is only on paper. In reality, it is not there. Fictitious transactions with related parties which really have not occurred. The auditor may not detect these, especially if he is unaware of that relationships. Next, remember, audit is not an investigation. We are not doing any investigation. Audit is not an official investigation. So we cannot guarantee that the financials are free from material misstatements. So this is one more limitation. We are not doing investigation. The nature of work we do is to obtain reasonable assurance. That itself is one limitation. And timeliness and relevance of the information. One more limitation is timeliness. For example, over time, relevance of information decreases. Auditor cannot verify every matter in detail. A balance must be struck between reliability of information and cost of obtaining it. For example, on 31st March, inventory closing balance, how much? I don't know, because I'm doing audit in April or May month. For me, it is not possible to attend as on 31st March every client physical inventory counting. So as on 31st March, how much inventory is there? Inventory verification records were given to me by the management. So that information is not relevant for me right now. Yes or no? So I have to do backward working. And how much I will do backward working? So timeliness, over time, relevance of information decreases. We cannot verify every matter in detail. Yes or no? So balance must be struck between reliability of information and cost of obtaining it. You can do investigation backward, but it will consume lots of resources. So that's why the kind of evidence that we get in audit is persuasive evidence. Generally, what kind of evidence we get? Persuasive. Remember, I'm not using the word pervasive. Pervasive is different. I'm using the word persuasive. Persuasive means what? Convincing. Next, for example, information relied upon from previous year may lose relevance and reliability if something new happened. Yes or no? Future events is one more limitation. In future, what will happen? We are not sure. We are giving opinion based on the historical data, based on information that is available. We don't know whether this information, suppose no, we are in the financial statements, no, management is using going concern basis. Going concern means what? Company will continue in the future. But in future, some disaster might happen, company might shut down. I don't know. So future events, future changes will adversely affect an entity's ability, will adversely affect the entity's ability to continue the business. Market changes, new business models, unforeseen events could cause the business to cease operations. Business might close because of these unforeseen events, all that. So future events, this is one more limitation. So these are all various limitations in the audit, because of which we cannot obtain absolute assurance. We can only give reasonable assurance. Clear? Next. See, we are able to finish quickly. You see how quickly we are going to see, how quickly we are going to understand. We are not just chumma reading. We are not chumma reading line. We are understanding it. Next, what is an assurance engagement? What are the elements thereof? What is an assurance engagement? You know what? Whatever works that we do, we call it as engagements. Whatever work that we do, we call it as engagements. And for every work that we are doing, there is a standard. We call them as engagement standards. For all engagements, for every engagement, we have to do it with utmost quality. For that, there is a standard called SQC. That standard is called a standard on quality control. This quality control standard is applicable for every type of engagement we chartered accountants perform. We chartered accountants perform so many works, right? For every kind of work, quality control standard is applicable. Now, whatever work that we are doing, what is it called as? Engagement. These engagements are two types: assurance engagement, non-assurance engagement. Now, what is the expected question is about? What is an assurance engagement? They are asking. What is an assurance engagement? Assurance engagement is again two types: on historical financial information, other than historical financial information. Assurance engagement can be in respect of two items: one, on historical financial information; two, other than historical financials. On historical financial information, one is reasonable assurance we can give, or we can give limited assurance. On historical financial information, we can give reasonable assurance, or we can give limited assurance. Reasonable assurance is called as audit, limited assurance is called as review. For audit, standards on auditing is applicable. For review, standards on review engagement is applicable. And remember, other than historical, we can give assurance, we can give confidence to people on future related data also. Prospective financial information or non-financial information. For this, we have something called standards on assurance engagement, SAE. Remember, this is SAS, standards on auditing, SA. This is SAE. Apart from that, we will also provide some services which are not at all assurance. We don't give any assurance. We do work some, suppose a client is asking us to prepare books of accounts, we do perform that. A client is asking us to prepare balance sheet, we go and prepare. These services are called as related services. For this, we have some standards called standards on related services. Now, this information is relevant for the next entire discussion. Another 10 to 15 minutes, this chapter will be over. Nature, objective and scope of audit chapter will be over in just another 10 to 15 minutes. Next up, Look at, I already told this notes can be obtained in free resources. You can go to CA.com. Free resources are there. Inside that free resources, CA into select, you will find all the folders, so you can easily download. Next, so what is an assurance engagement? So assurance engagement means what? What is an assurance engagement? First of all, what is engagement? See, before learning assurance engagement, what is engagement? Engagement means a contract. Engagement refers to an agreement between whom? Between auditor and client. What this engagement will contains? It contains audit services to be provided and is documented on an engagement letter. So engagement is an agreement between two parties. This agreement will be on a written format. That written format is called as engagement letter. Now, what is an external audit engagement? What is an external audit engagement? What is external audit engagement? What is the purpose? What is the purpose? Audit purpose is what? The purpose of audit is to increase confidence of users. There are lakhs of users. I want to increase their confidence in the financial statements. These are reasonable assurance engagements. Audit engagement is a reasonable assurance engagement. For example, in India, companies are required to have their annual accounts audited by external auditor. Non-corporate entities may also choose for various benefits. So what are the benefits of audit? What are benefits of audit? So look at, define an engagement. What are the benefits of an external audit engagement? Okay, not this, just a minute. Okay, we can cover this also, not an issue. How audit is benefited? It will benefit shareholders who are not involved in daily operations, who rely upon independent auditors. Audit now acts as a moral check. Okay, audited financials will have government authorities to determine whether tax liabilities are correctly recovered or not. Audited financials helps bankers, okay, to make credit decisions whether to give a loan or not. Audit helps auditor might discover frauds and errors, and auditor will review internal controls in the company whether they are effective or not. Thereby he will highlight deficiencies in the system and recommend the management what are the improvements can be done. Next, now we are going to get this one. What is an assurance engagement? What are elements thereof? What is an assurance engagement? Once again, assurance engagement is where assurance means in a work, no, in an agreement, in an engagement, no, somebody is giving assurance. Assurance engagement is where auditor, nothing but we call him as practitioner. Generally at a broader level we are called as practitioners. In audit works we are called as auditors. Okay, practitioner provides a conclusion. What we will give is called as conclusion. In audit we call it as opinion. In a review we call it as conclusion. In an assurance engagement we call it as conclusion. In audit works, historical financial information, reasonable assurance engagement is called as audit, right? In that audit, what do we call this conclusion as? The conclusion is called as opinion. What are various types of opinion? Unqualified opinion, qualified opinion, adverse opinion, disclaimer of opinion, yes or no? That's it. Now, an assurance engagement is where a practitioner provides a conclusion to enhance confidence of users about the evaluation of subject matter, against criteria. Yes or no? About the evaluation of subject matter against criteria. Now you see here there is a word other than responsible party. In exam they may give you including responsible party. As an MCQ they will give you, please be clear, we will give assurance on subject matter to third parties, not to the responsible party. He is the one who prepared the subject matter. Management prepared financials. We are giving opinion on the financials not for the purpose of management but for the purpose of third parties. Yes or no? Now what is the purpose of assurance engagement? Purpose of the practitioner gives opinion on specific information. Therefore users can make confident decisions knowing that chances of incorrect information is reduced. Since auditor is giving an opinion, people think that information is accurate. So the chances of wrong information is reduced because we are giving opinion, because we are verifying it. Elements of an assurance engagement. 4 marks questions right away. What is an assurance engagement? What are the elements of an assurance engagement? It is there in free resources, guys. It is there in free resources. I showed you already. I don't know why are you like, go to free resources. What is this? First one, September 25 expected questions. Open this. Inside this it is there. P5 expected question. Suppose you want material. Suppose you want audit material. Go to P5. P5 audit got notes. Here you can see. Okay. So audit chart notes is there. You can see audit, audit and ethics court notes, everything is there. Question bank is given here. Here there is something called exceptional questions. This you can leave it. Exceptional is different. Right now what I'm doing is expected questions. This is different. Expected question, exceptional questions means what, like in this exceptional question bank, you will find so many. For example, I'll show you, just for your idea, I'll show you. This is something called exceptional questions in every chapter. Like these are all various practical questions where if you read the question, you think some answer, but actual answer is different. Okay, the actual answer is different. So like that, there are some exceptional questions in every chapter. Approximately 100 questions per there in all chapters put together. After finishing all these revisions, if you still have time, go and read these exceptional questions once again. That's it. If you practice this revision and then exceptional questions, more than enough. You don't have to touch anything else. Fine. What are the elements of an assurance engagement? What are the elements of an assurance engagement? So assurance engagement involves first of all 3 parties. First of all, elements are like this: 3-party relation. 3 parties will be there, subject matter will be there, criteria will be there, evidence will be there, and a report will be there on the assurance engagement. There are totally 5 elements. First of all, 3 parties is 1 element. Subject matter will be there, suitable criteria will be there, appropriate evidence will be there, sufficient appropriate, and a report will be there. These are the elements of an assurance engagement. 3-party relation. 3-party means what? Assurance engagement involves 3 parties. 1, responsible party. This is the one who prepares the subject matter. Financial statements, who will prepare? Management. Management is the responsible party in audit engagement. Then practitioner, nothing but auditor, who will provide the assurance. Then this subject matter will be used by so many people, right? We call them as users, we intended users, who uses the assurance report to make the decisions. Now audit relates to historical information, where practitioner offer assurance. Not only, audit is related to historical. The practitioner, generally we practitioners, we CAs can also offer assurance on non-financial, other than historical financials also. What are other than historical? For example, here I showed no diagram. For example, review engagement, other than historical financials like assurance engagement, related services, these all we have in CA final. We don't have it in CA inter. Next, what is subject matter? Subject matter refers to information examined by practitioner. Whatever information that we are verifying, that is called as subject matter. So financial information in financial statements during an audit. What is criteria? Benchmarks used to evaluate subject matter. Tell me, in balance sheet P&L verification, in financial statements audit, we verify whether financial statements are true and fair. How do I know whether they are true and fair? We will compare that with accounting standard. We will compare that with schedule 3. That schedule 3, that accounting standard is called as benchmark. That schedule 3, that accounting standard is called as criteria. Okay, suitable criteria. Criteria is nothing but benchmark. Financial statements we compare with some benchmarks, whether with respect to benchmarks, are they true and fair or not. Then the practitioner obtains sufficient appropriate evidence to form the opinion. So in an assurance engagement, I have to get opinion. I have to get evidences. Evidence means what? Balance sheet P&L, they are matching with accounting standard or not, they are matching with schedule 3 or not. I need to verify in background row, books of accounts I need to verify, journal entries I need to verify, vouchers, bills and all I need to verify, yes or no. Sufficiency refers to quantity, appropriateness refers to quality. Evidence providing more comfort is qualitative. The evidence wherever I am getting 100% satisfaction, that is called as qualitative evidence. And a written report is provided which will contain my conclusion. Conclusion means what? I will give a conclusion, whether balance sheet P&L right or wrong, whether they're trustworthy or not, they're reliable or not, I will give a conclusion. So a written report is provided which contains conclusion that conveys assurance about subject matter. So a written assurance report is the outcome of an assurance engagement. So what is the outcome of the assurance engagement? In assurance engagement, what is the ultimate outcome? Audit report. Nothing but assurance report. Remember, assurance engagement is 2 types. Assurance engagement on historical information, assurance on other than historical. On historical, again 2 types. Reasonable assurance engagement, limited assurance engagement. Reasonable assurance engagement is called as audit, limited assurance engagement is called as review. And our entire CA inter audit subject, we are talking from reasonable assurance engagement point of view. Correct? That's it. Now what is review? Just now we understood what is assurance. Okay, within assurance there are 2 types of assurance, right? Reasonable assurance and limited assurance. Limited assurance is called as review, right? What is review? How audit and review are different? Audit provides reasonable assurance, review provides limited assurance, which is actually a lower level of assurance than audit. Review provides a lower level of assurance. Review involves few procedures where we gather sufficient appropriate evidence to form limited conclusions. In review also we perform sufficient appropriate audit procedures, but we perform only few procedures like inquiry, analytical procedure. Remember, there are various audit procedures. What are the audit procedures? Inquiry, inspection, observation, physical verification, recalculation, reperformance, inspection. So many were there. but in review we perform only two works: inquiry, analytical. That is why review involves few procedures. Okay, both audit and review, they both are related to financials, which are prepared based on historical data, which are prepared based on historical financial information. Now, what is difference between reasonable assurance engagement and a limited assurance? Reasonable assurance engagement provides high level of assurance. Limited assurance provides lower level of assurance. Okay, so limited assurance provides lower level of assurance than reasonable assurance engagement. Now, reasonable, it performs elaborate and extensive procedure to obtain sufficient appropriate evidence. In audit, we perform elaborate and extensive procedures. Elaborate, so many procedures we perform, like inquiry, inspection, analytical, recalculation, reperformance, all that. Whereas in review, we perform few procedures only, like inquiry, analytical. In a review, in an audit, reasonable conclusions will be drawn based on evidence, whereas in review, we only draw limited conclusions. Example of reasonable assurance is audit. Example of limited assurance engagement is review. Then there is another type of assurance engagement that is called prospective financial information. Apart from reasonable and limited assurance, there are engagements where the subject matter is beyond historical. It is not historical. For example, assurance on prospective financial information, assurance on internal controls. Now, what is a prospective financial? Prospective means what? Prospective financial information refers to financial data. Prospective financial information refers to financial data based on assumptions. It's a financial data. Prospective financial information related to financial data based on assumptions about future events and actions. It can be presented as a forecast. It can be presented as a projection. Forecast means, for projection is based on hypothetical assumption. Forecast is best estimate assumption. BE, best estimate assumption, is called as forecast. Hypothetical assumption is called as projection. Generally, for next 1 year, we can give a forecast. Next 5 years, we can only give projection. Okay, so that's the difference between forecast and projection. Or a prospective financial information can be a combination of both. Sir, what is PFI? How do we audit PFI? We have a specific standards like 3400, 3420. We have standards like this 3402. At CA final level, we will be understanding that. And what is the focus of these engagements? The engagements, they do not examine historical. The focus is on future, not historical. Historical information reflects financial details of past events and conditions or circumstances, whereas prospective is based on assumptions about future events. Difference, historical is rooted in past, whereas prospective focuses on future. Historical represents actual events, whereas PFI is based on assumptions about future events that might occur. Next, since it is future oriented, can we give reasonable high level of assurance? Can we give high confidence to people? No, we cannot. In engagements involving PFI, practitioner will verify whether management assumptions are not unreasonable. With respect to PFI, I will not verify balance sheet amounts and P&L about future. I will verify assumptions based upon which these amounts are prepared, and I will see whether information is properly prepared based on these assumptions. I will see first assumptions, whether these assumptions are logical, are they reasonable, are they sounding genuine, and whether those numbers, PFI, whether the financial information is prepared based on these assumptions or not. And in a PFI, auditor has to verify, the practitioner has to verify whether material assumptions are adequately disclosed. Accordingly, in these engagements, we can only provide moderate level of assurance. This part itself can be asked as a 3 marks question. In engagements involving prospective financial information, what practitioner has to ensure? They will ask you like this: you need to ensure whether management assumptions are reasonable, nothing but whether the management assumptions are not unreasonable, information is properly prepared and presented based on these assumptions, and whether all the material assumptions are clearly disclosed or not. Accordingly, in these engagements, the practitioner can only provide a moderate level of assurance. And remember, in these engagements, there is a huge limitation. Why? Prospective information is belonging to future. The evidence may be there, like assumptions, are they reasonable or not? You are checking, evidence might be there, but these assumptions itself is future oriented. Such evidence itself is future oriented. So the practitioner cannot confirm whether results in the PFI can be achieved or not. In the prospective balance sheet, prospective P&L, whether that numbers will be appearing, whether that number will turn into reality tomorrow or not, we cannot verify. We cannot give any assurance. So practitioner assures that nothing has come to their attention. In a PF, I know we give a negative wording, negatively worded. Nothing has come to their attention to suggest that assumptions do not provide reasonable basis for the projection or reasonable basis for the forecast. That's it. Then, so you see here, what is an assurance engagement and elements thereof. I completed that, and even prospective financial information also I covered. Next, what is review and difference? We covered this point also. And what are other assurance and PFI? That also we covered. Now let's look at the last one. What is the need for engagement and quality control standards? Okay. Now look at engagement and quality control standard. I already told in this diagram. We have totally SQC standards. We have engagement standards. We have. So what are the various types of standards we have? We have something called quality control standards. Look at the last one. Standards on quality control we have. Standards on quality control, these standards, no, the SQC, standards on quality control, establish standards and provide guidance on firms. It is not for auditors alone, it is for firms. Responsibilities for quality control system in audit, in review, in assurance and related services. Whatever work you are doing, they provide guidance on quality in audit, review, assurance and related services. SQC 1, they require auditors to establish quality control system to ensure compliance with professional standards, to ensure compliance with law and regulation, to ensure reports issued by them are appropriate. Whatever reports the auditors are giving, they are appropriate. The basic objective is to ensure a quality control system within firms that guarantees compliance with these standards. What is the objective of quality control system? The objective of quality control system is to ensure, I mean, it guarantees that the firm will comply with the standards. The firm will comply with law and regulation. The reports issued by the firm are appropriate in the given context. That is the objective of quality control system. Next. Yes. Next. Application. SQC is applied to all services covered by engagement standards. What are engagement standards? Remember, the expected question is need, actually need for EQC. So I'm just giving an example. What are various engagement standards? In the recent May 25, they asked this. What are various engagement standards? Give 3 examples. Nothing but standards on auditing is one engagement standard. Standards on review engagement is another example. Standards on related services. Standards on assurance engagement. Standards on related services. In that, in the exam, you need to write first one, standards on auditing, which will apply to audit of financial statements by independent auditor. They set high quality benchmarks for conducting audit. Standards on review, they apply to review of financial statements. A review provides a limited assurance, which is a lower level of assurance, which involves less than few procedures. Then third type of engagement standard is assurance. They apply to engagements which are dealing with subject matter other than historical information. They do not include audit and review of historical information. Related service. They apply to engagements where you are performing agreed upon procedure regarding financial information. So these are the 4 examples of various engagement standards. This already been tested in the recent May 25. Now what is the need for the standards? Why standards are needed? The standards are needed. Why? To ensure audits are conducted against established benchmarks aligned with global practices, to make sure that every CA do audit in a similar manner, improve the quality of financial reporting, aiding diligent decision making, promote uniformity in audits in the financials, equip those who are newly qualified. They may not understand how to do audit, so these standards train them, professional accountants, with necessary skills and knowledge. They ensure audit quality. Standards are like SOPs. They ensure audit quality. So what are the duties of the auditor? What are the duties of chartered accountants like you and me with respect to these standards? Our duty, professional accountants, they must follow standards in their engagements. If a specific procedure in a standard is ineffective, they must document how alternative. So in standards, they'll tell you what are all we need to do. If at all any particular work as per standards you couldn't do, you did something else other than that, how you did that, how you satisfied the standard rule, you need to document reasons also. They must also document reason for departure unless it is clear, and draw attention to these departures in the report. Disclosure alone does not absolve. Sir, just because I am disclosing in audit report, why? Auditor has to disclose. Draw attention in the report also, in the audit report also. If any standard you didn't follow, you need to mention clearly. Just because you are mentioning in the report, does it mean you can easily mention all the standards and escape from the work? No. Disclosure alone does not remove, does not absolve your accountant from complying. Just because you're disclosing that you didn't verify as per so and so standard, you are not exempted from that. There must be genuinity must be there, genuine difficulty must be there why you did not follow some procedure. Just because you're disclosing, I did not follow 200, I did not follow 500, I did not follow 505. No, you're not escaped. Okay, that's it. So with this, first chapter, nature, objective and scope of audit revision is completed. I hope you're confident. Okay, super duper revision, right? So all expected questions, technically speaking, more than expected questions I covered. Okay, next we need to discuss is ethics and terms of engagement, which will have a weightage of minimum 10 to 15 marks. Even nature, objective and scope also 5 to 8, sometimes even 10 marks also can come. Whereas terms, ethics and terms of engagement, minimum 10 marks weightage, sometimes even 15 marks might come. Like for example, from ethics itself 5 marks question will come. 210 itself, you know, in the May 25, ethics itself 10 marks came. So 210 5 marks will come. Pakka from quality control also 5 marks will come. So this is the second chapter, ethics and terms of engagement. What I will do is 10 minutes we will take a break. Okay, 10 minutes we will take a break. So just because no, it's like a high power sessions, no, powerful sessions, no, even I need a break, you also need a break. So 10 minutes break. We will resume at right now it is 7:37. Okay, let's assume 7:50. Okay, we will resume at 7:50 p.m. Okay, resume at resume at 7:30 p 7:50 p.m. Okay, that's it. That's it. Yes, guys, let's continue ethics and terms of engagement, SQC. Just 2 minutes, I'll finish my coffee. Some students are asking whether audit and FM paper might be tougher because costing was easy or moderate. You don't know, but in a group, generally one paper will be tough and high chances will be there for audit to be tough. That's why understanding, deeper understanding is required. Those who just mug up the subject, not answer MCQs, deeper understanding is required. Okay, fine, we'll work it out. Yes, guys, let's continue. Let's continue with the second chapter, that is ethics and terms of engagement and quality control. Remember, this chapter has a weightage of close to 15 marks. Okay, ethics, SCA 210 and quality control, three topics put together has a weightage of 15 marks, minimum 10 marks pakka, but many exams 15 marks came in many exams. You check Jan 25, you check September 24, May 24. It is almost 15 marks from this chapter. So most important chapter. Now, first we'll finish ethics, then 210, then quality control. In ethics, the first part, principle based approach versus rule based approach. What is a principle based approach and what is a rule based approach? Now look at ethics, principle based approach versus rule based approach. Now, what principle based approach actually says? In a principle based approach, accountant must comply with the spirit of the ethics. Like many students will ask, sir, in companies act, no, suppose if my grandfather is a director, there is no provision in the relative definition does not cover grandfather, no, so can I accept the auditor? That is rule based approach. Literal interpretation of the law, yeah, if at all your grandfather is a director in a company, you can still audit that. But spirit of the ethics, understand the intention behind the law. Understanding intention is what called a spirit. Okay, so the principle based approach, accountant must comply with spirit of the ethics. It requires use of professional judgment in every situation based on knowledge, skill and expertise to evaluate and reach conclusions. Then there is another approach called rule based approach. In a rule based approach, we simply follow established law, rules and regulations. This can narrow the outlook. In a rule based approach, the ethics will be narrow, okay, and may overlook spirit of the ethics. So it is rigid and we cannot identify all the situation by rules alone. Therefore, it is essential to follow spirit of the ethics rather than just the letter of the law to ensure ethical compliance in all situations. That's it. Principle based approach versus rule based approach. 4 marks possibility, 3 or 4 marks question possibility. Next one. What are fundamental principles? Look at Next question, what are fundamental principles of ethics? All 5 fundamental principles are important. In the recent exam or May 25, even in Jan 25, they asked questions. That too, 1 mark questions asked in a descriptive part. This is very important. At CA final level also, they are being testing it. What are fundamental principles of ethics? Fundamental principles of ethics, they set expected standards of behavior for a professional accountant. Fundamentals are nothing but what is expected from a chartered accountant. A professional accountant must comply with the following fundamental principles: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. What is integrity? Accountants, we chartered accountants, we must be straightforward and honest in all our professional and business relationships. Integrity means fair dealing and truthfulness. Integrity means fairly we should deal. Accountants must not be associated with reports. We should not sign these reports. We should not associate our name in these reports. Which reports? Which are false or misleading, which are negligently provided, recklessly provided, or if the information is omitted or obscuring information, that is misleading. If at all some information is misleading in some document, you are signing the document that everything is correct, then that is also danger. So we professional accountants, we should not associate with false or misleading statements. We should not associate with negligent given information. We should not be associated with reports which are omitting or obscuring some information which is misleading. However, in these 3 cases, you can still give your name if you give a modified opinion. If you give a modified opinion, if you raise an objection on that and then say that this is missing, then no problem. Then second principle is what? Objectivity. Accountants must not compromise professional judgment due to bias, due to conflict of interest, or due to undue influence. The accountant should not take activities where relationships or circumstances unduly influence their professional judgment. So you should not take any work. Suppose in a company, my grandfather is a director, sir. Can I accept the audit of a company because relative definition does not cover grandfather? No, you should not, because that relationship, it will influence your professional judgment. You cannot point out deficiencies in the company because your grandfather will say, hey, listen what I say. Yes or no? Then third ethical principle is professional competence and due care. You must maintain required knowledge and skills to provide competent service based on standards and legislation. They must act diligently, thoroughly, and timely, following technical and professional standards for each assignment. So the professional accountant must act diligently, they must act thoroughly, they must act timely. So competence means first point, due care means second point. Suppose if a client, he gave you in the last minute the work, you accepted it, that you told him that you will file IT return within due date, but you didn't file it. It comes under due care violation. It comes under due care violation. Okay, you must act diligently, carefully with the client. You must act thoroughly on time, where you have to comply with the technical and professional standards, everything. And fourth principle, confidentiality. What is confidentiality? It requires accountants to respect confidentiality of information obtained through professional or business relationships. Whatever information you are getting, no client will share you his personal financial information. His entire financial profile will be revealed to you. You must keep it confidential. You must keep it secretly. Confidentiality supports public interest by ensuring free flow of information between client or employer and accountant, with the understanding that it won't be shared to anybody without their consent. Confidential information sometimes we will disclose, sometimes we don't have to comply with confidentiality. Sometimes there is a requirement in law or permitted in law and authorized by the client approved me, so I can disclose this information, or there is a professional duty or right to disclose if not prohibited by law. For example, NFRA is conducting review on us, so the NFRA is asking about my client data, I have to disclose, I don't have another option. So in these 3 cases I can disclose even though there is a confidentiality principle which is there. Then something called professional behavior. Professional behavior means what? We accountants, we chartered accountants, we must comply with laws and regulations and avoid actions which will discredit our profession. Accountants should not engage in activities that might harm the integrity, objectivity, reputation of the profession, as it would be incompatible with fundamental principles. Suppose ICA is asking some information, you are not responding, you are careless. It's a professional behavior violation. It's a professional behavior violation. That's it. These are fundamental principles. Then, what are various perspectives of independence? What is its importance for listed companies? Third expected question from ethics topics is, what are various perspectives of independence? Perspectives of independence. Here you see 2 perspectives of independence. One is independence of mind. Second perspective, independence in appearance. Independence of mind means what? It's a state of mind where you take unbiased judgment. Your mindset says take a right decision there. Independence of mind is a state where unbiased judgment is taken. Independence of mind ensures you are straightforward, integrity, objectivity, and professional skepticism. Because of independence of mind, I will be skeptical. Then second one is what? Independence in appearance. What is independence appearance? Third party, some other public, they should not think that me and this company are related persons. So avoid situations that are so significant that an informed third party would conclude that integrity, objectivity, skepticism had been compromised. Third party should not feel like your integrity, your skepticism, your objectivity is compromised. So avoid those kind of situations where a third party might feel your integrity, everything is compromised. For example, third party means what? Here you see, they didn't use the word simply third party, they used the word informed third party. What do you mean by informed third party? He is the one who has a knowledge of the law, knowledge of accounting, knowledge of CAs, how we practice. That person is called as informed third party. And therefore, independence must exist in fact and in appearance. In relationships between audit and client, auditor should satisfy that auditor is independent. Any unbiased person shall conclude that independence is not compromised. This ensures confidence to the users of the financial statements. Importance in listed companies for statutory auditors, independence and integrity are ultimately important. If at all you are not independent, people will not have faith in your report. So he is expected to be objective, unbiased, fearless, and capable of giving honest opinion. Now, independence, no, subjectivity. Independence is a word which is subjective in nature. So one person you may be appearing independent, for another person you may not be appearing independent. Independence depends on state of mind and character of a person. One person may feel independent in some circumstances, another person may not feel in the same way in a similar circumstance. So ultimately, it is a chartered accountant duty to decide whether they can act independently in the given circumstance or not, and avoid any position that might compromise their independence. Then next expected question, what are the threats to independence with examples? All 5 threats are important. Threats. What are various threats? 5 threats, but they're self-interested, self-review threat, advocacy threat, familiarity threat, intimidation threat. Self-interest. What is self-interest? This threat occurs when audit firm or any partner is getting benefit from a financial interest in the audit client. If the audit firm or a partner is getting some financial interest from the client, then self-interest threat occurs. For example, direct financial interest or material indirect financial interest in the client. You know, our firm or partners or relatives are having shares in the company. So that's a self-interest threat. Loan has been taken or given to the client or taken from the client, depending on client fee, risking loss of an engagement, close business relationship, high fee I'm getting from a particular client, that's a self-interest threat. Potential employment with the client, contingent fees for audit engagement, if at all I'm taking fees on a contingent basis, that's a self-interest threat. Self-review. This threat occurs when auditor reviews their own judgment, their own conclusion. I only took one decision in balance sheet P&L and I am only verifying now whether it is right or not. Sir, how did you take? Earlier I'm an internal auditor of the company. Earlier I'm a director of the company. Earlier I'm a CFO of the company. Now I resigned from CFO. Now I became an auditor. Because of this self-review threat occurs. So it occurs when an auditor reviews their own judgment or conclusion from a previous audit work or previous non-audit work. Previous audit means what? Internal audit, for example. Examples, when auditor or team member was recently a director or recently a senior officer of the company, or when auditor performs some services that are subject to audit. I am only preparing books of accounts in the past. Now I am only auditing that. Non-audit services means what? Management services, internal audit, investment advisory, IT system design, and all these services are called as non-audit services. Sometimes in exam they may ask you 3 marks question. Write about self-review threat. Give few examples of non-audit services. They'll ask you this note point as a question, 3 marks question. That is also possible. Be careful. Next, advocacy threat. I will also tell you about presentation. Don't worry. Okay, presentation things also I will tell you. Advocacy threat. When advocacy threat occurs when auditor promotes a client opinion to the point where objectivity may be perceived as compromised. You are promoting client's opinion. Whatever client decision is there, you are just saying that is right. He is right. He is right. He is right. Array, that is not illogical. Client is saying account building useful life is 100 years. That is actually 30 years only. But you are supporting client. their objectivity is compromised. In such a way you are supporting. So that is called advocacy threat. When auditor deals with shares and securities of the audited company, when auditor deals in shares and securities, sir, if this point, no, direct financial interest means what? Auditor dealing with shares and securities both means what? For example, I'm trading in shares of the client. Their advocacy threat might come. Okay. If at all I'm having ownership in the company, like I have an investor, as an investor, I invested in the company. That's a direct financial interest, self-interest threat. If I am holding shares of the company as an investor, that's a self-interest threat. If at all I'm trading in those company shares, then I'm having advocacy, means I'm supporting the client so that I'm using the client and then getting profits. That is advocacy threat. Okay. When auditor acts as client's advocate in a litigation or a third party dispute, in these cases, the auditor may be perceived as supporting the client's cause, undermining his unbiasedness, undermining his objectivity. Then, familiarity threat. What is familiarity? Familiarity threat occurs when auditor became too close to the client, whereby they end up being too sympathetic to client interest. I became so close to my client. Today, I'm unable to object his mistakes in the financials. In books of accounts, he did something wrong. Now I am unable to object it because I am getting a feel that no, he might feel bad like that. So that is called sympathetic, too sympathetic. Like for example, when this familiarity threat comes, if close family member is working in top management of the company, former partner of the audit firm is a director of the company. My earlier partner is a director now. We are both so familiar to each other. Long-standing relationship between auditor and the client counterparts. Accepting gifts and hospitality from the client is giving me so much of hospitality, so many gifts is giving me. Okay, all this makes me sympathetic towards client interest. Then intimidation, it occurs when auditors are deferred, when auditors are deterred from acting objectively with the skepticism. Examples: threat of replacement due to disagreement, pressure to reduce work for lower fee, threat of litigation. So these are various examples of intimidation threats. So look at, so these are various threats to independence. Okay, I think you're clear on this. Then we need to learn safeguards to independence. Then we need to learn safeguards to independence and professional skepticism. With this, ethics point will be completed. Trust me, 5 marks question guarantee. In the past 5-10 minutes, whatever we discussed, and now in next 5 minutes, what we are going to discuss, pakka 5 marks question. Look at safeguards to independence. What are safeguards to independence? Auditor must always be independent and also appear independent to the public so that they will have a confidence in the audit quality. Auditor should always appear. We should appear that we are independent. The key principles are, what are key principles for independence? In order to make sure you are independent, what are the key principles? Integrity, objectivity, skepticism, all requires independence. Before accepting work, you should check whether it involves a threat to the independence. Before, whenever you are accepting, when some client comes and asks you, sir, can you be auditor? You should check for threats in all dimensions. See whether there is a threat to independence. If at all threat is existing, what auditor has to do? Do not accept that client, withdraw from the task, or take precautions to eliminate the threats. For example, in that company, my wife is having some shares. I will tell her, don't purchase any other shares further. And if at all the shares of if my wife's shares face value is more than 1 lakh, I will tell her to sell some shares so that the face value becomes less than or equal to 1 lakh. I will take these kinds of steps. For example, if I am unable to apply safeguards, if I am unable to take these kinds of precautions, I will decline the work. I will not accept the work. So safeguards means what? Indirectly telling my people around, see, I have to be independent. There are disqualifications under company law. None of you, please, every one of you comply with that so that I will not be disqualified. So these are called as safeguards. Okay, precautions. That's it. So these are the safeguards to independence. This itself can be asked as a 4 marks question straight. This itself can be asked as a 4 marks straight question. Next. Concept of professional skepticism. Skepticism means what? Skeptic. Skepticism means questioning mind. Questioning mind means what? Suppose if a client is showing you, sir, we have achieved so much of turnover. To this time our profit is so much. Don't believe it blindly. See the records, see the sales, see the purchases. Okay, you will not believe the client 100% blindly. Of course, you will not doubt him, but you will not believe at the same time 100% of the client words. You will have some benefit of doubt, and that attitude is called as skepticism. Okay, so skepticism is an attitude of questioning mind, being alert to unusual situation, critical assessment of audit evidence. Skepticism is an attitude of questioning mind, and it is alert to unusual situations and critical assessment of audit evidence. For example, I visited physical verification Okay, inventory. Go down, I went. No CCTV cameras, nothing. Immediately, that's something unusual. There is a possibility of theft. Store manager, he himself is keeping the record. He himself is giving delivery of the goods. He himself is accepting the goods. Oh my God, there is no separation of duty, segregation of duty. Immediately, I'll get it out. He can do a fraud. So this kind of risk analysis, risk assessment, what can go wrong, identifying, that is called questioning mind, and that is called skepticism. Skepticism means, in skepticism involves alert. You are alert always. Alert to what? Alert to evidence that contradict other evidence. Are a company you told profit is so much, but books of accounts show profit this much, balance sheet P&L shows profit this much, different sources showing different information. When I'm alert told, I can see this. Information questioning reliability of documents or responses. Information questioning reliability of documents. I got some information where this document I feel wrong. Conditions indicating possible fraud. Need for additional procedures. So because you are alert, you may end up like this. And what are the benefits of skepticism? It reduces risk. Skepticism reduces risks. What kind of risk it will reduce? Risk of overlooking unusual circumstance, risk of over generalizing audit observation, risk of making inappropriate decisions regarding audit procedures, nature, timing, extent. And generally, by default, you can accept documents are genuine. See, skepticism does not mean you have to doubt him. You have to always doubt him. See, I told you, don't doubt him, but at the same time, don't believe him 100%. So you have to maintain that balance here. Okay, so you can accept client records as genuine unless there is a doubt. However, auditor must evaluate reliability of information. If a doubt of suspecting fraud is there, further investigation is needed. Remember, sometimes we'll be traveling with the client from past 4 or 5 years. In the past, I felt that client is honest. Even then, maintain skepticism. Auditor cannot ignore past experience with honesty and integrity of the management, but still maintain skepticism regardless of past interaction. This is professional skepticism. Okay, this is professional skepticism. That's it. This is regarding ethics related content. Now we need to discuss about 210, SA 210. Just 1 minute. Then SA 210. Now, before I proceed with 210, how should we present the answer? Always your question number descriptive, for example, question number 2A, on the top you must write, as well as you will have a left margin right there also you must write. If you remember the standard, you can start with, first you write relevant provision in the standard. So you can put a heading like first you can put a heading. For example, if 210 question came, SA 210, agreeing terms of engagement, agreeing to terms of audit, terms of audit, that is the right word, agreeing to the terms of audit, heading. Then you first write the relevant provision. You can write a heading like relevant discussion under the standards on auditing. Relevant discussion under SA 210, like this you put a side heading. Then you write whatever the applicable matter. Then you give analysis and conclusion. You give analysis and conclusion in the given case. In the given case, so-and-so auditor did so-and-so, therefore, which is not as per so-and-so above standard, accordingly invalid. This kind of presentation you have to do when the question is a case scenario based. Like in the sense, in the question they said so-and-so happened, this fellow has objected that fellow has objected this, like that. If some case, like a case scenario, practical question they give in a descriptive. Suppose if it is a straight theory question, for example, what are various threats to independence, like that they asked, or they asked you this question, what is self-review threat, what are examples? Then you can directly write, for example, next question, question number 3B, okay, self-review threats, okay. Self-review threat occurs when the auditor is called upon to review his own judgments which are made in previous audit or non-audit engagements. The following are various examples of self-review threats. List out. Okay. Recently, the former partner of the auditor is a director in the company. Like that, you just whatever examples applicable there, you just write those examples. And remember, in every example or in every whatever matter you're writing, underline the keywords. Underline the keywords with a pencil or pen. Anything is fine. Better use pen itself, because your answers will be scanned and that will be sent to the valuationer. If you highlight with pencil, in scanning, pencil underlines may not be recognizable sometimes, so be careful. So underline with pen only the keywords. That's it. So this is when the question is a direct. Mostly in the descriptive 70 marks paper, 40 to 50 marks will be direct questions only. Some 20 to 25 marks or 30 marks worst case will only be practical oriented questions. Okay, that's it. So this is how you need to present it. See, it's an audit paper, no much complication about presentation. Straight answers, mostly theory questions, direct questions only they'll be asking, though some case studies there, direct questions only they'll be asking. Okay, so don't worry. But I told you, if at all there is a practical question, first to put relevant standard heading, then relevant discussion under the standard, then give analysis and conclusion. When you're giving analysis and conclusion, analysis is in one para, then one line space, and from here in the given case give conclusion like this. That's it. This is how you should present it. Okay, and apart from that, in audit you don't have to worry more about presentation. It's very simple. In costing, financial management, tax paper and all, presentation is a very big deal, because there are numbers, practical papers. In audit and law, generally presentation is not a big concern. I have seen many students answers who are very pathetic in handwriting, worst handwriting, but understandable. They got 80 plus in audit. So it's not about beautiful presentation alone, it's about accuracy of the answer. Your answer must be very, very accurate. Okay. Now let's look at SEA 210, agreeing to the terms of audit engagement. So in that, no, directly, first question, what are preconditions of an audit? What are the consequences if preconditions does not present? Okay, fine. Preconditions means what? Preconditions means what? What are preconditions? As per 210, preconditions includes two things. There are two issues that are called as preconditions. One, management using an acceptable financial reporting framework for financials. Auditor has to check whether financial statements are prepared by the management using a financial reporting framework that is acceptable. At the beginning of audit, you should ask management, are you going to prepare financials as per schedule 3 only? Management says yes. Okay, precondition is present. First precondition. Second precondition, agreement. Management has to give an agreement to you. Management has to agree. They have to agree. What? On premise of the audit. What our management has to agree? Our management has to agree on the premise of the audit. What is premise of the audit? Premise means nothing but management responsibilities, management's agreement on, so this is the responsibility of auditor. Auditor has a responsibility to ensure preconditions are present. Auditor has a responsibility to ensure preconditions are present. So the auditor must determine whether financial reporting framework is acceptable. Just a minute. Yeah, the auditor has to determine whether financial reporting framework is acceptable. Whatever framework are they going to follow is acceptable or not, check out. Second one, get management's agreement. Ask them to agree. Agree on what? The following premise. What is that? Management is responsible for preparing the financial statements in line with the framework, including fair presentation framework, nothing but we will call it as applicable financial reporting framework. Management must agree on responsibility for internal controls to prevent material misstatements due to fraud and error. Management has to agree on providing auditor with access to all information, records, documents. Management must agree on providing additional information requested by auditor. Management must agree on providing unrestricted access to necessary persons within the entity. Whoever people are there in the organization, auditor can talk to anybody. I can ask anybody any question. That kind of arrangement, that kind of power management should give to the auditor. Suppose if preconditions are not present. What do you mean by preconditions not present? If the financial statements are prepared using some framework that is not acceptable, they did not follow schedule 3 properly, they did not follow NDAs or accounting standard, or they are not agreeing on three things: responsibility to prepare financials as per applicable financial reporting framework, responsibility to provide additional information, responsibility to give unrestricted access to persons. They are not agreeing on this. If preconditions are not present, discuss why, what is the reason, what problem, why are you not cooperating me, discuss, reject the audit, reject it, don't accept it unless required by law. If at all law says it is mandatory, you can't reject, then accept it unless required by law. If financial reporting framework is unacceptable, when you will reject? One, financial reporting framework is unacceptable. Two, management does not agree on responsibilities regarding financial statement, responsibilities regarding internal controls, responsibilities regarding access to information, people, all that. So if financial reporting framework is unacceptable and management is not ready to agree on preparation of financial statements, internal controls and access to information, records, documents, people, in all these cases preconditions does not present, reject the audit. If management imposes a limitation, don't accept the audit if preconditions not there. Suppose no, you accepted. After accepting, management is now stopped cooperating. If management impose limitation that affects auditor ability, the auditor should not accept such engagement. You should not accept. What if precondition do not present after accepting? Withdraw. You will resign. That is there in the next part. Okay, so that's it. Next question. What are the contents of the engagement letter? What are the contents of the engagement letter? Pakka from 210 5 marks question. Pakka 5 marks question. Or at least an MCQ questions will be there. 2 marks MCQ will be there. Pakka. Look at engagement letter. What is an engagement letter? Format is there in ICA material. These are the contents. Engagement letter includes objective and scope of audit. Responsibilities of auditors will be clearly mentioned. Responsibilities of management will be clearly mentioned. Identification of applicable financial reporting framework. What framework is applicable for the company? That also will be mentioned in an engagement letter. Reference to expected form and content of the reports with a statement about possible variation. We will also talk about how audit report is going to be, expected form of the audit report, content of the audit report with a statement that the expected form and content might vary depending upon the findings of the engagement. See, in engagement letter, we are not saying we will give so and so opinion. We are not saying that. We will give opinion as per so and so standard. As per that standard, so and so format is applicable. If at all any circumstances were there, we might change this format. Like that, we will mention. So, contents of engagement letter. Now, there are some circumstances where engagement letter is not required. In exam, they can ask you this point also. So, like they'll ask you, what are the contents of engagement letter? Under what circumstances engagement letter is not required? For example, if terms are given in law in detail, law and regulation, suppose we are doing stat audit. In the law and regulation itself, terms of engagement are clearly defined. The auditor don't need to include them in the letter. So, whatever terms and conditions law already given publicly, don't mention that. In any other terms, if at all missing in the law, mention the terms and conditions clearly. Except that stating the law or regulation applies and management acknowledges its responsibilities. So when the terms of engagement are prescribed clearly in the law and regulation, you don't have to include those terms in the engagement letter. Just mention the fact that you give an engagement letter. Inside that you mention the fact that all the terms and conditions were given in the law. That law alone you will mention. That point alone you will mention in the engagement letter. If at all terms of engagement were clearly given in the law and regulation. That's it. For audit, you have to attend MCQs at first, because in audit descriptive paper, nothing big deal. 15 minutes reading time and all. Okay, fine. You just read 15 minutes. Try to figure in audit. 15 minutes reading time will be given. Try to figure out whether any practical computation problem is there. For example, drawing power computation in bank audit will be there. Like that, you figure out any 2 or 3 questions. You figure out. Develop the entire answer. Just copy the moment at 2 o'clock starts. Generally, time problem will not be there in audit paper. So don't worry. Unless the paper is so lengthy, generally it won't be. So time problem will not be there in audit. You don't have to worry. Next. What are the matters to be considered before agreeing to changes in terms? Sometimes client will be asking you to change the terms. Like for example, you accepted the audit for 5 years. First 2 years is very good. 3rd year he is asking you to change the terms. Now, before you decide whether to change or not, what matters you will consider? That is the question. But just before that, I just want to give one more point. Engagement letter is sent by auditor to client, where client will agree to this. Okay? To reduce misunderstandings. The auditor must agree on terms with management or those charged with governance as appropriate. For a non-statutory audit, it is most important to have engagement letter to avoid conflicts. The engagement letter must be in writing to ensure both the parties are clear on nature and scope of the work. Now look at changes in terms. Generally, why changes happens? Reasons for changes what? Circumstances might have been changed. Misunderstanding of original terms. A restriction on the scope of the engagement. For example, in the past 2 years, you're doing audit so severely, you're asking that data, this question, that question, you're visiting here and there. Client don't want all that. In 3rd year, he want to restrict. Sir, you please do not ask going there, here and all. So that could be the reason. Okay. Now, when you will accept it, you will accept it if there is a reasonable justification, and still, even after the change, work is as per standards on auditing. Like standards on auditing objectives and all was not violated. Then you will accept. And whenever you accept the change, please agree new terms and record the new terms in a new engagement letter. Okay. And in the new letter, don't talk about old letter. To avoid confusion, the new engagement letter shall not refer to original engagement and procedures performed from the original engagement. You will not accept when you will not accept when there is no reasonable justification. Suppose if auditor is not agreeing to the change and management is not ready to continue with your terms, they want their own terms and you are not agreeing to that, you withdraw from the audit. The auditor must assess whether any obligation to report about withdrawal, like whenever you withdraw, you need to report to the withdrawal is nothing but resignation. You have to report it to ROC, all that. Next, now this is the most important question, this one. What are the matters to be considered before agreeing to change? If auditor is asked to change audit engagement to one with a lower assurance, they must determine whether there is a reasonable justification for the change. For example, your auditor was asked, what they were asked, please change the audit engagement to lower assurance level. For example, I was called for review. Review itself is lower assurance. If they are asking me lower than lower assurance, I will not accept at all. Suppose I was called for audit, then they are asking me, sir, we don't need audit, sir, you are asking so many questions. No, you just do inquiry, analytical, few procedures. Review, you just do review. See, I will see what I will see, before I agree, what I will see, before agreeing to change audit engagement to a review engagement or to a related service. So from audit to review, audit to related service, before agree to this, the auditor must assess legal obligation, contractual implications of the change. I will see whether in the law it is permitted or not. Okay, if change is justified, whatever work I did until the change, okay, I will use it, but the report will be provided as per the new terms and conditions. To avoid confusion, the report on the new engagement will not mention original engagement details and procedures performed in the original audit. If the terms of engagement are changed, the auditor and management must agree on and record new terms in the new letter or another suitable form of the letter. So these are the matters which auditor has to consider. What matters? Legal and contractual implications of the change. Most important, legal implications, contractual implications. Before I agree to change an audit engagement to a review, before changing from audit to related service, I need to verify legal and contractual implications. Then auditor shall also send, is there a requirement? Okay, fine, I'll go back. Circumstances for sending engagement letter in recurring audit. Recurring audit means what? For example, I'm appointed for 5 years. First year I gave engagement letter. Second year, third year, fourth year, fifth year also should I give engagement letter? Now further the answer is here. Initial audit engagement. In case of initial, first time you are appointed as an auditor, the auditor must issue engagement letter in a newly appointed audit. For the first time you are appointed as an auditor, you must issue engagement letter. Okay. Recurring audit. What about recurring audit? Recurring audit is something where previous year auditor is reappointed for current year. In recurring audit, you must decide whether engagement letter is needed based upon circumstances and professional judgment. Based on circumstances and based on judgment, you should decide. Circumstances. What are the circumstances? The engagement letter should be reissued in the following circumstances. The engagement letter must be issued in the following. The engagement letter must be issued in the following circumstances. 1. Company, the entity misunderstood the objective and scope of audit. They misunderstood. You gave one engagement letter. No, they misunderstood from that. Give an engagement letter once again with a detailed explanation of objective and scope. Or second one, you need to issue engagement letter once again if there is a revision in terms. If terms are revised, issue it. Or there is a change in law and regulation, issue. Change in financial reporting framework, issue once again engagement letter. Change in reporting requirements, issue engagement letter. Change in top management, issue engagement letter. There is a change in nature and size of the business, issue engagement letter. That's it. Timestamp, somebody is asking, this is a live class, but timestamps cannot be added now. After live is over, timestamps can be, will be added. That's it. Quality control. That's it. With this ethics and terms of engagement is over. Now the third segment in that is quality control. In quality control, SQC is there, right? There are two standards in quality control. One is 220 standard, one is SQC standard. In SQC, this element you must study. Acceptance and continuation of client relationship you must study. Then we need to study engagement quality control review topic. In the recent CA final exam also, September 25 CA final audit also, engagement quality control review topic was tested. And there is another question in 220. Engagement partner has to emphasize importance of audit quality. For that, he has to do some actions. What actions he should do? Okay, that one. 3 topics were there in quality control topic. Now look at quality control. What are various elements of quality control? 6 elements of quality control. Straight away, sometimes this itself can be asked as a 4-mark question, or it may be an MCQ. Leadership responsibilities for quality, ethical requirements, acceptance and continuation of client relationship, human resources, engagement performance, and monitoring. And all these quality control policies must be documented, and it must be communicated to every person in the firm. Audit firm, every person will be there as staff members. We should communicate it. Now, ethical requirements, not even that, acceptance and continuation of client relationship. You know, when a client comes and asks you, sir, can you become my auditor? Don't accept it blindly. There are 3 points you should check. First, before accepting a client, or before continuing with him, the firm must gather vital information. The firm must gather some information about the client. First one, integrity of the client. Second one, you should check your competence, you should check your capability, you should check whether you have time and resources, okay, so that you can perform this work, and see whether you can comply with ethical requirements. Comply. So 3 things, auditor, 3 things the firm has to consider before accepting or continuing a client relationship. Like first one, what? Integrity of the client. Second one, competence, capability, and resources available. Third one, compliance with ethical requirements. And fourth one, the 3 requirements. The firm should document how issues are resolved when deciding to accept and continue client relationships. Like, some issues you will definitely face. When you're accepting the client, some conflicts might be there. How did you resolve it? Document it. So this is one important element. Now, 3 points you need to consider, right? One is what? Integrity of the client. Integrity means what? Integrity means what? What are the matters with respect to integrity? Integrity means who are the owners of the client, who are the principal owners, who are the key management, who are the governance members, what is their business practice, what is their attitude towards accounting standards and internal control, are there any pressures from the client to reduce the fee, indications of scope limitation, involvement in money laundering or criminal activity, why previous auditors were changed. Okay, all these points I should consider whenever I'm checking integrity of the client. Generally, if a client is involved in money laundering activity or criminal activity, I will not accept him. Why? My risk will be heavy. I will be in the risk. Suppose conflict is there. Suppose when you're accepting the client, you found some conflicts. Array, in that client, my sister is having shares, or my wife is having shares. Conflict is there. Any conflict between the firm and client must be resolved. Please resolve it before accepting. If the firm obtains any information after accepting the engagement that could have affected the decision regarding acceptance, you accepted the work now. Later you got to know that in that company your cousin is a director. Oh, if I know this earlier, I would have declined this work. I would have not accepted. If this kind of situation is there, if the firm obtains any information after accepting engagement, what kind of information? That information would have affected the decision regarding acceptance. If at all I know this earlier, I would have not accepted. That kind of information I got. Now, the firm has to check legal and professional responsibilities. Check legal and professional responsibilities, including reporting to relevant parties, possibility of withdrawal from the engagement. So what are the legal responsibilities here? Do you have to report to anybody to see whether withdrawal is possible or not? So these are the 2 points auditor has to consider. If at all the firm has got information after accepting the work, that information which could have affected the acceptance itself. Then so that is regarding acceptance and continuation. Even I want ethical requirements also important. Ethical. The firm shall design policies to provide it with reasonable assurance that firm and its personnel and experts, they comply with code of ethics. So everybody inside the firm, every expert that the firm is contacting in the client engagement, we all have to comply with ethical requirements. The firm has to maintain independence wherever required, and policies and procedures shall communicate independence requirement to personnel, identify and address threats to independence, withdraw if threats cannot be eliminated. So firm must have policies to communicate independence. The firm must have policies to identify independence. Firm must have policies to withdraw if at all any threat is there. Engagement partners should report any threat of independence promptly. Prompt notification of breaches and all must be there. Obtain written confirmation of compliance on annual basis. The firm has to obtain from every team member in the firm, partners, articles, from everybody, that everybody complied with independence requirements. Written confirmation the firm should get. Next, human resources. Policies and human resources means what? These are the policies and procedures that provide reasonable assurance that the firm has sufficient personnel with capability, competence, ethical principles, all that. SQs is very important. That's the reason I'm covering fully. Okay. The firm must have policies. What kind of policies? To provide the firm reasonable assurance. The firm must have a reasonable assurance that the personnel inside the firm, they have capability, they have competence, they are complying with ethical. So HR issues and all we should address. What are HR issues? Recruitment, compensation, training, career development, performance evaluation, all that. The firm has to focus on continuous developments of the persons. Then engagement quality control review. Another expected question I already told. Engagement quality control review. What is engagement quality control review? Okay. Major judgments, significant judgments, they must be reviewed by quality control reviewer before issuing the report. The extent of review depends upon complexity and risk involved in the engagement. You know, I am one partner in the firm. I am doing audit of so-and-so company. I complete an entire work, but I will not sign the report. Before signing the report, that too for listed companies, engagement quality control review is mandatory for listed companies. So before I sign, no, I have another partner. I will appoint him as a reviewer. And I'll ask him, see, this is my work. All significant judgments, you once again check it. Whether is there anything wrong? So that's it. So the review does not reduce engagement partner responsibility even after quality control review. For the opinion that you are expressing, engagement partner is only ultimately responsible. This engagement quality control review is mandatory for listed entities. Engagement quality control review is must for all audits of listed entities. What about other audits? What about other engagements? Firm will develop the criteria. For other engagements, no, non-audit engagements, all that, firm will develop the criteria. Oh, somebody is watching from Bahrain. Okay. Differences between engagement partner and quality control review. For example, no, reviewer says, hey partner, you are wrong in this. Partner says, this is right only. If there is a difference of opinion between partners and quality control review, any disagreement between team, reviewer and partner, they should be resolved. If any differences of opinion is there between the team members, between the reviewer and partner, resolve it before issuing the report. If quality control reviewer recommendations not accepted by the partner, the matter shall be resolved by policies and procedures, by consulting another practitioner or by consulting another firm or by consulting professional body. Okay, fine. So quality control recommendations, engagement quality control recommendations, if at all not accepted by partner, then whose decision will work? Partner is not agreeing to reviewer is not agreeing to partner, then how it will be resolved? Firm policies and procedure will resolve it. What firm policies and procedures might tell? It might tell contact another CA, contact another firm, contact professional body, like that it might say. Then there is another important element. Within engagement performance is documentation. You know, the firm must establish policies so that there will be a timely assembly of files. For audits, no, assembly must be completed within 60 days. Okay. Retention period is for how long? Documentation must be retained long enough to perform monitoring procedures. That to audit documentation must be retained for at least 7 years from the date of audit report or group audit report, whichever is later. That's it. Then what is the next question? Actions of engagement partner. This is very important. Many times it is asked. Many times. SA 220 leadership point is there, right? Here the second point you see. The actions of engagement partner while taking responsibility for overall quality. Engagement partner is responsible for overall quality of an audit. The engagement partner is responsible for overall quality of an audit. You know, now he is responsible, right? He has an act, he has to demonstrate team members through his actions. What he should demonstrate? The actions of engagement partner should demonstrate, should emphasize performing work. I should emphasize people, I should emphasize my articles, everybody, that you all perform the work that comply with the standards, regulatory, legal requirements. You all perform the work so that the work is complying with firm quality control practices. Ensure that audit report is appropriate and encourage the team to raise concerns. If at all any of my team members have any doubts, please ask me without any cover, without any fear of reprisal. That's it. That's it. Rest all other points not a big deal. Okay, rest all other entire SA 220 not a big deal, but better, you know, here Engagement partner should document the following. What he should document? Ethical issues identified, independence related conclusions, conclusions on acceptance and continuation of client relationship, consultation details including scope of consultation, and what are the conclusions reached. These are the points which engagement partner has to document. That's it. SQC, SA 220, no, both these standards were discussed only at a brief level in CA Inter. But from these two standards itself, pakka 5 marks question. Every attempt they're asking. Only in the May 25 they didn't ask. This time there is a high possibility they will ask. That's it. Another chapter we completed. Another chapter we completed. You remember what we thought for today? Like first today, we thought these topics. NOS 5 to 10 marks portion completed. Ethics 10 to 15 marks portion just completed. Then we have documentation and bank audit. Okay, then I'll do one thing. Bank audit first I will discuss, then I'll come back to documentation. Clear? Now I will give you 10 minutes gap, 10 minutes break I will give you right now. Okay, what you need to do within this 10 minutes? Revise whatever is there in ethics and terms of engagement. 10 minutes. Just quickly read whatever expected questions we covered. Just one time reading. Then immediately we'll continue bank audit chapter. Okay. Right now 8:40 will resume. Will resume at okay, 8:40, right? Will resume at 9 o'clock. Okay, 9 o'clock. And remember, bank audit we are going to discussion. Bank audit to be discussed. 20 minutes time I'm giving you right now. What you have to do, please keep the video like this alive, live. Okay, revise simultaneously. Right now revise, mainly what you will revise, 210 standard you revise, terms of engagement, and then quality control 220, whatever expected questions we covered, right? Next 20 minutes just to revise. Yeah, somebody is asking, Lalita is asking a doubt, please. Yeah, please tell me, ma, what is the doubt? And many are not liking the video. You have to like the video, please. I hope you are getting a lot of benefit from this. Just like the video, share it to your friends also. Okay, please put the doubt, ma, I'll clarify later. Okay, just 20 minutes, ma, please. 20 minutes. 9 o'clock again I will resume. The live will be as it is, just 20 minutes. Okay, please revise it right now. Ethics, terms of engagement, quality control. Ethics, okay, you keep it aside, or else if possible revise ethics also. 20 minutes is there, no, you can easily revise. I reminded you everything conceptually, understanding also I'm giving you, so just revise it quickly. Yeah, you can continue watching right now. Okay, and then tomorrow session timings I will schedule it, ma, directly I will schedule it. Tomorrow sessions. Hello. Yes, sir. Yes, I am back. Yes. Let's continue discussing bank audit, audit of banks. I hope everyone have revised the ethics and terms of engagement. Just reply me. Just reply in the comments. Have you all revised it? We literally finished 25 marks portion. We literally finished 2 chapters put together, minimum 20 marks weightage, minimum 20 marks. Now we are going to finish another 5 to 10 marks, minimum 5 pakka, or sometimes it can be again 10 marks also. Fine, we'll proceed. Audit of banks. Okay, now look at what are the expected questions. In bank audit, what are the expected questions? Additional reports by statutory central auditor. So what are various additional reports? Yes, very good, very good. Everyone are replying yes, completed revision, very good. Okay, fine. So now let's proceed with bank audit. What are various additional reports that will be reviewed by statutory central auditor? What are various additional reports? Look at additional reports which are given by statutory central auditor. This itself can be asked as a direct 4 marks question. You know, we give various reports. Of course, the ultimate objective is to give opinion. That too we give through audit report. Yes or no? Apart from audit report, yeah, anybody can watch bank audit. Even if you have not studied earlier, because you already have subject knowledge of audit, you can study. I will make it understandable. Okay. Yeah. So apart from audit report, chartered accountants will also give additional reports. Okay. What are they? IFC report on adequacy and operating effectiveness of internal controls as per Companies Act. This is annexed to main audit report. To the audit report, we will annex it. And long form audit report, SLR compliance report, report on treasury operations, report on IRAC, we call it as IRAC, income recognition asset classification norms, report on irregularities on working of a bank, report on compliance with Ghosh committee, compliance with Gilani committee. Remember, Ghosh committee is dealing with frauds and malpractices. Gilani committee is dealing with controls and inspection of systems. Gilani committee is dealing with controls and inspection. Ghosh committee is dealing with frauds and malpractices. An MCQ might come only on this. And report on adverse credit deposit. Remember, it's a credit deposit. Credit lending, no, it's not credit lending, it's credit deposit. Credit itself means lending, it's a lending deposit ratio. Next up, so these are various reports which auditor has to give. And again, no, there is one more question which I feel very important. Wait, you know, these are the additional reports which auditor has to give, correct? Apart from this, auditor will also use various reports. We will use various reports. You see, auditor reviews the following reports for adverse comments. You know, there are so many reports where adverse comments will be given. So many reports. Those reports we will use it. Remember, previously what I covered, reports which we will give additionally. Here I am talking about what? We will be reviewing some reports given by others. Whether are there any adverse comments? What reports? Our previous auditor's report, internal inspection report, RBI inspection report, concurrent or internal auditors report, security verification report, manager's charge report, handing over report. You know, in exam they may ask you an MCQ also. Auditor will review various reports for adverse comments. 3 points they will give from any of this. 1 point they'll give an additional report. Compliance with SLR. That's a report we give. This is a report we receive to review adverse comments. Be careful. And this particular report's question was asked in May 25 or Jan 25 or September 24. Somewhere it was asked for 4 marks. There are various reports which auditor has to review to identify adverse comments. What are the reports? Give few examples. This one. I hope you understood. Both the questions are different. Next. Engagement team discussion. Okay, what is engagement team discussion in the context of bank audit? Here it is there. Okay, in procedure for conducting bank audit, engagement team discussion point is there. Engagement team discussion. Engagement team, no, they will hold discussions. Why they will discuss? To understand the bank and what is its environment, to understand internal control. What's the purpose of this discussion? Where the purpose is to identify, assess potential for material misstatement, conduct discussions at the planning stage of the audit, document the discussion for future references. What matters they will discuss? Matters that they will discuss is what errors likely to occur. Are there any errors which we identified in previous audit? What are the methods through which frauds will be committed? Need for skepticism, response to engagement risk and pervasive risk and specific risks that the auditor has identified in risk assessment process, alertness to material misstatement. What are the advantages? It helps assessing fraud risk in financials and planned response to the engagement, pervasiveness, all that. What is the advantage of the discussion? Advantage is it will help you to assess fraud risk. It will enable the partner to delegate work to experienced team member based on the work. It will facilitate the decisions to involve specialists. Because of the engagement team discussion, we will understand whether specialist is required or not, experts are required or not. Next, reporting by auditor of bank. Which reporting? That to reporting to central government and reporting through LFR. These two reporting requirements we need to understand. Remember, for a bank, CARO is not applicable. For a bank, CARO is not applicable. Be careful. Reporting. Okay, reporting. Reporting by auditor. What reporting? Reporting to central government first. For all nationalized banks, the auditor has to give a report to central government. The auditor has to give an audit report to central government. In that report, these 4 points must be mentioned. First one, verify whether balance sheet and P&L present true and fair view. The auditor has to report whether balance sheet and P&L are the true and fair. Second one, confirm whether requested explanation, requested information were satisfactory. I will confirm whether all the information I received, all the explanation I got, is it satisfactory? Auditor has to report to central government whether he received satisfactory information explanation. Auditor has to report whether transactions are within the powers of the bank. Auditor has to report whether branch returns are adequate for the purpose of audit. Some branches, we don't visit. So those summary statements we will receive. Branch returns are adequate for the purpose of audit. That we will report. And further, one more point, important point is that authority to appoint auditors. Authority to appoint auditors. Okay. Regional rural banks appointed by board of directors with the central government approval. Regional rural banks appointed by central government. For all nationalized bank, including SBI also, you can take appointment by board of directors with RBI approval. And for banking companies, appointment is by shareholders with shareholders at AGM with RBI approval. That's it. For State Bank of India, C&AG will also consult, okay, along with central government. And ultimately, remember, board of directors only will appoint for all nationalized banks. This conclusion you can take. Next. Then we have classification of advances based on security and modes of creating security. Classification of advances. Now, first of all, remember, advances are major assets of the bank, and that's an income source for the bank. Okay, advances are like what? Loans, credits given by bank, all that. These advances are two types: large advance and other advance. Large advance means what? Large advances we have to verify 100%. Other advances we will verify on a sampling basis. What is the criteria for large advance? Year-end balance. If the outstanding year-end balance is more than 10 crore or 10% of the branch aggregate year advance, whichever is lesser. When a large advance, what is a large advance? A large advance is an advance where outstanding balance is more than 10 crore. It's a large advance. Or it's not more than 10 crores. It is just 1 crore. But it is more than 10% of the branch outstanding at the year end. Our branch is there, right? In the branch total outstanding loans, yours is 10% or more. Then also yours is a large advance. Okay, next. Again, advances are funded and non-funded. Non-funded means what? Letter of credit, bank guarantees, all that. Funded means what? Term loan, cash credit, OD, demand loans, all this. That's it. Then we have, what is this? Classification of advances based on security. This one. How advances? Classification of advances based on security. Advances are again classified into two types: primary security, collateral security based advance. Primary means what? Principal security offered by the borrower for the loan. Collateral is an additional security provided by the borrower. Common examples of securities are what? What kind of security bank will accept commonly? goods, gold, bullion, immovable property, plantations, LIC policies, stock exchange securities and other instruments. All these are common securities which are accepted by a bank. Now, there are various modes through which a security can be created. Okay, I will give some security. How you will create it? Mortgage. For immovable properties, the method of creating security is called as mortgage. For movable items, the method of creating security is called as pledge. For vehicles and all, inventory loans, vehicle inventory, current assets will be giving a security, right? Vehicles will be giving a security, hypothecation. And there is another thing called security assignment. Life insurance policy, we will assign it. That method is called as assigning. Then set off, then lien. Fine, one by one we'll discuss. Mortgage again two types: registered mortgage, equitable mortgage. Bank will only go with registered mortgage, where mortgage is created using registration instrument called mortgage deed, who is signed by mortgagor. Equitable mortgage means what? We don't register the title deeds on the name of the bank. We will give original deeds to the bank, created by delivering title deeds to the bank with an intention to create security. Pledge involves what? Bailment or delivery of goods to the bank as security. Ownership is still with the pledger. For example, gold loan means what? The gold will be given to the bank. That's how the pledge is created. Okay. Hypothecation, car loan, bike loan, inventory loan, these all comes under hypothecation. Ownership and possession both are with the borrower only, who acts as the banker's agent and trustee. Borrower submits statement of assets like stock, debtors, etc. to determine drawing power. Assignment, transfer of existing or future debt. I have a debt, means I have to receive something from somebody at a future date. That I will transfer to the bank. Okay, right. Only actionable claims will be accepted by the bank. Actionable claims, those which are accepted under law. That's it. Set off means what? For example, I have a loan with a bank, State Bank of India, some Chennai branch. With the same bank, I have savings account also, deposit also. If I do not pay the loan, what happens? The deposit amount I have, no term deposit, fixed deposit, bank will set off. Enables banks to combine two accounts of the same person. Accounts must be in the same name and in the same capacity. Right of set off applies to time borrowed debts also. All branches of the bank are treated as one for the purpose of set off. Lien means what? Where lender has a right to seize or liquidate the asset. If at all borrower is not repaying the asset, I will exercise lien, I will sell it off also. That is called lien. That's it. These are various modes through which a security can be created. Next, what is an NPA and what do you mean by out of order? NPA and out of order. So here we are going to discuss about various types of NPA, out of order, special NPA norms. So these two we are going to discuss now. Then we will be discussing about drawing power, controls over advances, partial recoveries, recovery of NPA, and audit of interest expenditure. Once these completed, bank audit topic will be over. Then we have documentation chapter that we will discuss. Now look at, advances. Advances of a bank are classified into two types: standard loans and NPS. Standard means what? Standard again two types: standard regular, standard special mention accounts. Special mention accounts are again three types: SMA 0, SMA 1, SMA 2. SMA 1, overdue for more than 31 days. SMA 2, overdue for more than 61 days. SMA 0, accounts showing stress signals. NPS are again classified into three types: substandard, doubtful, loss asset. Doubtful again is three types: D1, D2 and D3. What is an NPA? I'll just clear this ma. I hope nothing is given here. Yeah, fine. Yes, that's okay, no problem. Now NPA. What is an NPA? NPA norm is again different. For term loans, NPA norm is different. For overdraft and cash credit, NPA norm is different. For bills purchased or discounted, NPA norm is different. What is an NPA? An asset becomes NPA when it stops generating income for the bank. For example, a term loan becomes NPA when the interest or principal or both overdue for more than 90 days. Overdue means what? From due date of payment, 90 days crossed already, still we didn't receive the payment, and that is called overdue for more than 90 days. A term loan will become NPA if it is overdue for more than 90 days. Bills remained overdue. Bills discounted by the bank, maturity date came, but still amount not collected. 90 days also crossed. Bill was overdue for more than 90 days. Then also it is called as NPA. Third one, cash credit and overdraft. They will become NPA if they are out of order. A cash credit and overdraft are treated as NPA if they are out of order. Now, remember, classification of NPA depends upon record of recovery. But fine. I'll go back to that point later. What is out of order first? Out of order means what? Out of order, there are three circumstances where we say a cash credit OD is out of order. Like first one, outstanding balance is exceeding sanctioned limit and drawing power continuously. What is a sanctioned limit? Sanctioned limit means, for example, a borrower can repay 10 crore. I will sanction the loan 10 crore. 10 crore I will sanction. But remember, he cannot withdraw entire 10 crore. If I have to release fund, he has to give me security. Suppose borrower, no, he gave me 10 crore worth of security. I will not release 10 crore worth of loan. I will keep some 30% margin. 7 crore only I will permit him to withdraw. That withdrawal limit is called as drawing power, which is 7. Sanction limit means how much loan he can avail from me, 10. How much he can withdraw from the loan, 7. Withdrawal permission is called as drawing power. How much loan he can get maximum is called as 10 crore. Suppose he is giving 100 crore worth of security, but sanction loan is 10 means he can only get 10 maximum loan. So if outstanding balance is more than sanctioned limit, if the outstanding balance is more than drawing power, then we call it as out of order. Second one, suppose balance is less than sanction limit, outstanding is less than sanction, less than drawing power, but no credits for 90 days. Last, you see ledger account of an overdraft customer. In exam they'll give you ledger account. 31st December only last time payment is there. Now 31st March came, no payment is there, credit is not there. That's an out of order. Or credits are there but insufficient to cover interest debited. In the last 90 days, bank debited 1 lakh interest, but customer paid only 50,000. In the last 90 days, credit is there but insufficient to cover debit. Then also we will call it as what? Out of order. That's it. A cash credit facility of 50 lakh, but drawing power is 40 lakh. The account is out of order if outstanding amount is more than 50 or more than 42, or outstanding is below 42, but there is no credit for 90 days, or credits are insufficient. Like 2 lakhs versus interest debited 5 lakh. 5 lakh is debited bank, but you credit only 2 lakhs. That's it. Next. Overdue means amount due to the bank which is not paid on due date. Now again. Now remember, NPA classification is made borrower wise. What does it mean? Suppose we gave a loan, 3 loans to same customer. Housing loan, car loan, personal loan. Personal loan became NPA. Automatically housing loan and car loan also NPA. Sir, they are repaying regularly, sir, both the loans. No problem at all. NPA classification is borrower wise, not facility wise. Okay. And remember, classification of NPA is based on recovery only, not based on security or guarantee or his net worth. Sir, borrower is having super net worth, sir. Doesn't matter. He didn't repay for more than 90 days. That's it. It's an NPA. That is what the meaning. NPA classification is based on record of recovery. That's the meaning. Next. Out of order we also understood. Now for NPS, how much provision? For substandard assets, bank has to create 15% provision. Whether secured portion or unsecured portion doesn't matter. If the substandard outstanding loan is there, some 100 crore, 15% provision bank has to maintain. Doubtful asset, D1 category, secured portion 25%, unsecured portion 100%. D2 category, secured portion 40, or doubtful, unsecured portion 100. Doubtful category, secured portion 100, and then unsecured portion 100, both. Suppose if it is a loss asset, asset where loss has been identified, total 100%. Getting it? Next, special NPA norms. Then we have something called special NPA norms, which is very important. What is special NPA norms? Accounts regularized near balance sheet. What does it mean? It actually became NPA, but by 31st March, again the account is, the loan account is shown as a standard loan. Auditor has to see how an NPA became a standard. That's called upgradation. How it became upgraded. Auditor has to see. Accounts with credits just before balance sheet date. You need to handle these accounts with care. If data indicates inherent weakness, the account should be treated as NPA. The auditor shall check sample transactions before and after year end to get knowledge of the credit. If credits are reversed during first few days after closure of financial year, it shows inherent weakness. Okay. Government guaranteed, very important. Government guaranteed advances are again two types. Central government guaranteed advances, state government guaranteed advances. Central government guaranteed advances, suppose central government guarantee loan is given and he is not repaying, 90 days also crossed, still standard asset only. I will not call it as NPA, but interest on that I will stop recognizing. For interest point of view, it is NPA. Advances are treated as standard if guarantee is not invoked. I mean, it is not cancelled yet. Guarantee is still there. However, for income recognition purpose, it is treated as NPA. State government, it is classified as NPA if overdues for more than 90 days for both income recognition purpose and asset classification purpose. Relaxation of provisioning does not apply. Income recognition norm is similar to central government guaranteed advance. Now, there will be something called advances under consortium. Group of banks together giving loan is called consortium, where one bank will be leading that. That's called as a lead bank. Loans advanced by 2 or more banks is called as consortium loans. Banks with higher share will be called as lead bank. How asset is classified? Each bank, there are group of banks. Each bank, are they recovering their amount or not? Their share, are they recovering? If they are not recovering, they will be treating it as NPA. Okay, if at all borrower remitting fund to lead bank, but lead bank is not transferring to other banks, automatically borrower account is treated as NPA by other banks. Okay, so lead bank computes and allocates drawing power to member banks. Borrower may request adjustments of DP allocation among member banks. Okay, that's it. Next, drawing power illustration. Okay, this one you don't take. How to compute drawing power in exam? How to compute drawing power in exam? You know, in exam, no, they will give you value of inventory. Value of inventory. They will give you value of debtors, and they will give you value of creditors. For example, if value of inventory is 100 crore, value of debtors is 200 crores, value of creditors is 20 crore. Okay, like how a drawing power has to be calculated. For example, in exam, no, in this 10 crore worth of inventory is damaged goods. In this debtors, no, 50 crore worth of debtors are outstanding for more than 90 days. This is the information which they provided. How to calculate drawing power? How much inventory? Value of inventory 100 crore is there, minus outstanding, the damaged goods we will not be taking 90. Debtors, how much were there? 200, but 50 crore worth of debtors are outstanding for more than 90. We will not consider that. In exam they'll give you that criteria 150. Now look at 90 crore worth of inventory is there, but 20 crore worth of debtors outstanding, creditors outstanding is there. These two I will set off. So how much worth of inventory owned by the company? 70 crore only own inventory is there. Oh, inventory, own inventory 70 crore. Eligible debtors are 150 crore. Okay, this much I will give loan, huh? No. Again, in exam they will give you margin percentage. Inventory 30% margin, debtors 40% margin, like that they'll give you. So when should you apply margin? First, value of inventory minus ineligible inventory, remove it, minus creditors. Then you will get net own inventory of the company. From that margin you remove. Okay, now you will get what? 49. Here 40% 60 means 90. Total 139 is the drawing power. Once again watch this, you will understand. Okay, that's it. This is how drawing power is calculated. Very simple. Total inventory minus ineligible inventory, balance inventory, minus creditors. Then you will get own inventory eligible for loan, minus margin is equal to net drawing power on inventory. Then debtors minus ineligible debtors, then balance debtors, minus margin is equal to drawing power from debtors. Total drawing power of inventory plus debtors is equal to total drawing power. That's it. This is how drawing power has to be calculated. Very easy. Okay, next, accounts with erosion in security or value. Erosion refers to gradual destruction or diminution in security value. You know what is a loss asset? For example, no, a customer gave a security. Okay, security is there, loan we gave, customer is repaying everything proper, but when we revalue the security, no, the realizable value of the security is now how much? You know, less than 10% of the outstanding loan. Oh my god. Now when we value the security given by the customer, I already gave a loan, already security is given by the customer, now the value of the security is so less than 10% of the outstanding loan, then we will straight away classify it as a loss asset and will write off fully. Sir, he is repaying regularly, it doesn't matter, security itself is gone. Tomorrow if at all he stop repaying, what happens? So prudence concept, recognize expected loss first. Suppose no, we valued the security, now whatever value is there, it is less than last time valuation, 50% less than last time. If realizable value of the security is less than 50% assessed value as per banker RBI at last inspection, such advances will be classified as doubtful asset. Provisioning will be made as per doubtful asset norms. Next, advances against term deposit, national savings certificate, Kisan Vikas Patra, Indra Vikas Patra. Advances against term deposit, national saving, KVP, IVP, they are not NPAs until adequate margin is available. Agricultural advances. Agricultural advances are two types again: long duration crop loan, short duration crop loan. You know, long duration, short duration, it is based upon crop season. What is crop season? It is a period up to harvesting of the crops raised, would be determined by state level bankers committee in every state. Now, what is NPA norm for a long duration crop? NPA, long duration crop loan, will become NPA if installment remains overdue for one crop season. Installment is overdue for one crop season, it's an NPA. Short duration, it is treated as NPA if installment remains overdue for two crop seasons. Two crop seasons over and it is overdue. Now, what is a long duration crop? First of all, a crop with a crop season more than 1 year is called as long duration crop. If the crop season is more than 1 year, it's a long duration. Then what is short duration crop other than long duration crop? For short duration crop, what is NPA norm? If the loan is overdue for more than two crop seasons. For long duration crop, what is NPA norm? If the loan is overdue for more than one crop season. Next, computation of drawing power, just now I told. Okay, computation of drawing power, just now I told. Remaining agriculture advances affected by natural calamity, advances to stuff is easy. You can study on your own. Okay, or else I'll read it better. I'll explain it once. If at all agriculture loan is given, but natural calamity, it is governed by RBI Master Circular on IRAC for calamity affected advances. What the circular says, you know, relief measures by bank. Bank can convert that production loan into a long-term loan, reschedule the repayment period, sanction a fresh short-term loan. NPA classification will be as per the rescheduled terms. Staff advances. Interest-bearing staff advances will also form part of bank's advance portfolio. Suppose if a bank is giving loan to staff, which is where bank is charging interest on that, that is also forming part of bank's advance portfolio. NPA classification. If interest is payable after principal recovery, interest is not considered as overdue. Classified as NPA only if the installment is overdue for more than 90 days. Salary advance, not as a employer I'm giving some loan to employee, which will be adjusted in the next 2-3 months. Salary advance, that is not shown under advances portfolio. That will be shown under other assets under others. Okay, that's it. Now, how drawing power is computed? Drawing power is the limit up to which a firm can withdraw from working capital limit. Sanction limit means what? It is a total exposure a bank can take on a client for facilities like cash, credit, all that. DP is calculated based on security minus margin, I told already, whereas SL is maximum limit that is given. Okay, now look at what are the rules for computing drawing power. One more expected questions. What are the rules? Accounts must stay within both drawing power and sanction limit. You know, a loan account of a customer must be always less than sanction limit, must be always less than drawing power. Where any account is exceeding drawing power sanction limit, no. Okay, or a loan is obtained using unapproved security or loan is irregular, they must be reported to the top management or head office. Drawings in working capital account must be covered by current assets adequately. Drawing power must be calculated based on latest stock statement. Stock statement shall not be older than 3 months. If there is an outstanding advance with stock statement over than 3 months, no, then the account is treated as irregular. It is classified as NPA. DP computation must follow guidelines from the bank's board of directors and agreed upon by statutory auditors. Remember, DP guidelines are decided by bank board of directors, and what exactly the guidelines auditors has to agree upon. Special focus must be given on creditors during DP calculations. What are the auditor's concerns here? Scrutiny of borrower documents. Auditor concerns. There are two concerns. One, borrower documents you should scrutinize. Stock audit is also one more concern. Scrutinize stock statement, quarter returns, other borrower submitted statement. Compare monthly stock statement with audited accounts. Stock audit. Required for accounts where total exposure is more than 5 crore. Auditor can recommend stock audit even for other cases. For consortium, you need to obtain stock audit from lead bank. Auditor has to review stock audit report. For what? Focusing on valuation and calculation of DP. Why are you reviewing stock audit report? Where you will check valuation of security and you will also check calculation of DP. These are the 2 points that you will check. Okay, when you are reviewing stock audit report. That's it. Then evaluation of internal controls over advances. Internal controls over advances. You see this point. Evaluation of internal controls over advances. The auditor review bank's internal control, which should include Advances are made. I need to check credit worthiness. I need to check whether bank has made necessary documentation. I need to check whether funds are used for the right purpose. I need to check whether margin of safety maintained or not. I need to check whether bank created security or not. I need to check whether drawing power is correctly calculated or not. And I will review each advance account once in a year or more frequently for large advances. Auditor has to review whether bank is reviewing. It's not auditor. Whether bank has an internal control. Whether bank has an internal control where they will review large advances frequently and remaining advances once a year bank has to review. Account has to be reviewed. For example, no, I received OD from one bank. After 1 year, no, they will allow me to continue OD account only after review of my account. Okay. Now credit worthiness. Advances are made only after verifying borrower credit worthiness and obtaining proper sanction. Necessary documents like agreements, everything must be executed before disbursement. Compliance with terms of sanction and proper use must be ensured. Maintain sufficient margin. Transfer of ownership to bank. Creation of security. Transfer of ownerships. Register securities in the name of the bank. Inspect and verify go downs in case of current assets. Hypothecation, all that. DP. What auditor has to check regarding DP? Controls, internal controls. Remember, this itself can be asked as a 3 marks question. What are the internal controls over drawing power? Update drawing power registers monthly and ensure entries are verified by proper officer. Accounts should stay within DP and sanction limit. Irregular accounts should be reported to controlling authorities. These are various controls related to advances which auditor will verify. Next, partial recoveries in NPA. Okay, directly. Partial recoveries in NPA. By the way, again in loans, no, substantive process will perform. Sometimes this itself can be asked as a 4 marks question. What are substantive process on advances? What are substantive? Verify the recorded amount. Check the loan documentation. Review the operations in the account, ensure security valuation enforceability, checking compliance with RBI norms, performing analytical procedure. These are all substantive procedures in advances. Yes. Large advances 100% verification. Okay. Other advances may be on a sampling basis. Problem accounts examine in details. Okay. Special focus must be given on advance sanction during the year or commented by RBI internal auditor or inspection teams. Then there is something called partial recoveries. Partial recoveries in NPA. You know, whenever a bank is recovering any amount from NPA, no, first the amount is adjusted for principal or first it should be adjusted for interest. What bank has to do? Bank will have some policy. That policy has to be followed uniformly for all accounts. In absence of clarity, bank must adopt a consistent accounting policy for appropriating recoveries from NPA. This must be applied on a uniform and consistent manner. Recognize income only when certainty attaches to realization. Interest realized on NPA can be taken to income account. Ensure that interest amount is received by the bank is not from fresh loan. That's it. So this is partial recoveries in NPA, which itself can be asked as a 3 or 4 marks question. Then we also have something called reversal of income. Another expected question is reversal of income. Reversal. We are about to finish bank audit chapter. Just another 5 minutes. It will be over. See how easy the bank audit chapter is. Reversal of interest. If an advance, including bills purchased and discounted, becomes NPA, the entire accrued interest must be reversed or provided for if not realized. Okay. Suppose no any bills purchased and discounted. If at all it became an NPA or a term loan became NPA, whatever interest accrued, no, we recognized on accrual basis, no, for 90 days, up to 90 days, we must reverse it. And this applies even for government guaranteed, central government and state government. Even any for NPS, no, fees, commission, similar income, everything will stop to accrue. It must be reversed or provided for. Wrongly recognized income. For wrongly recognized income, reverse the amount. Okay, all that. Next, that's it. Takeout finance. There is a possibility of takeout finance. Takeout loan replaces initial loan with a long-term financing. Takeout loan is, for example, initially I have a loan with ICICI Bank. Now HDFC Bank is taking this loan from ICICI Bank, where HDFC Bank will repay the loan to ICICI, and now I will become a HDFC Bank customer. It is used in generally property developments and based on meeting some project completion criteria. It is classified as NPA. I mean, if classified as NPA, income should be recognized only when realized. Objectives. What is the objective of takeout finance? Expanding financing sources, addressing sectorial or group or entity exposure, credit mismatch issue, boost availability of long-term debt facilities. That's it. It's an easy question. Audit of interest expenditure. Next one is what? Audit of interest expenditure. You see, Audit of interest expenditure. With this, expected questions from bank audit is over. And remember, if at all you want 100% coverage of the marathon of all the topics, already have a, I have this this one. For example, you see here. Here I have given expected questions PDF, right? Here there is a link. See here. You see here link. You click this link. You are directed to this. In this, chart revision is there. You see, first one is GOAT notes revision. Already more than 1 lakh views. Like, you students are supporting me like anything. If quality content is given, student amazingly respond. You see here, array, what happened? Yeah, now wait, I think it is playing. You see here. So here timestamps were given. Almost every chapter is covered here. Even the bank audit, for example, you see more than 45 minutes it was discovered in depth. Okay. Now here you see chart revision. Inside chart revision, chart book also can be downloaded on free resources. At the introduction itself I gave where you can download. You see, for example, essay 210, whatever we covered now, ethics and terms of engagement, whatever we covered now, bank audit, everything is there in chart revision also. In chart revision also 20 minutes I covered. Fantastic clarity you will get, guys. Trust me, the kind of clarity you get in chart revision is also fantastic, amazing. So my previous version revision is already here, 11.5 hours, which covers 80 marks to 90 marks portion. Chart revision which covers 120 marks portion. And apart from that, I am doing now live also. How many resources we are giving, you see? Okay, fine. So interest expenditure audit, audit of interest expenditure. The auditor has to ensure interest expenditure is reasonable by analyzing ratios and comparing them with the average of the liabilities. How much is the average liability? How much is the interest incurred during the year? Last year, how much is the average liability? How much interest incurred? The following procedures. We have to obtain quarterly analysis of how much is the outstanding deposit. We will compute weighted average interest rate, and we will compare this actual rate and investigate material difference. How much is the actual rate incurred? We will compute average rate. Compare average interest rate with previous year, and why there is a variation I will ask. Obtain general ledger breakup for interest expenditure, like how much is for savings deposit, how much is for term deposit, how much is for various term deposits. Perform monthly, quarterly cost analysis and document reasons. And auditor has to test check calculations. In exam they may ask you only this point. Audit of interest expenditure is one of the important area in audit of banks. And when auditor is verifying interest calculation, auditor has to test check some important things. What are various things auditor has to test check in interest? Interest is provided on all deposits up to balance sheet date. See that on every deposit up to balance sheet date, outstanding interest is recognized. See the interest rates are as per bank regulation, RBI directives and deposit agreements. See that interest on savings account is following RBI rules. Interest on interbranch balances also must be provided at prescribed rate in branch books. Verify interest rate changes during the period and ensure interest is accrued on entire borrowing portfolio and matches the general ledger. Recompute interest accrual by considering payment frequency, rate and term sheet as well as agreements. This is what various points that you need to cover in interest expenditure audit. Interest expenditure audit is most important in bank audit. This one also is important actually. Provisions and contingencies. Understand banks provisioning process. For standard assets, how they are providing interest, how they are making provisions. For NPS, how they are making provision. See loan classification on a sample basis whether it is correctly done or not. Reconcile loan classification with general ledger. Okay, and ensure compliance with regulatory requirements as per RBI circular. Apart from this, we have something called tax provisions, all that. See that they are correctly made. And review provisioning for expenses and assess adequacy with management explanations, all that. With this, bank audit is completed. Revision of bank audit is completed. I hope you're confident. Only these questions you study. It is enough. It is enough. Whatever I've given here, no, that is enough. Audit of interest expenditure. Here I will add one more thing, ma. Audit of operating expenses. Audit of operating expenses. Not operating. Sorry. Audit of provisions. Audit of provisions. Okay, that also I will add. That's it. Hope you are clear on this. Okay. So what I will do, 10 minutes break now. Not 10 minutes, 15 minutes break now. Go back. Not 15 minutes. Okay. 10 minutes sufficient. 10 minutes sufficient. Okay. 9:50. I will resume again the session at 9:50. Resume set 9:50 p.m. What we will continue here? Documentation. SA 230 to be discussed. And you know what? Until now we have completed 25 to 30 marks portion. Now we are going to finish another 5 marks portion. This documentation chapter revision is hardly 15 to 20 minutes. Okay, that's it. We'll continue at 9:50. Yes, I am back. Yes, guys. Just it is loading. Yeah, perfect. You know, until now in this live, the past 3 hours, some out of it, some half an hour to 40 minutes breaks only. So we effectively we discussed only 2 hour 20 minutes roughly. We completed nature, objective, and scope of audit chapter. We completed ethics, terms of engagement, and quality control topic, which is a 15 marks weightage. This is 5 to 10 marks weightage. And now we also completed bank audit, which is minimum 5 to 10 marks. Yes or no? Literally we completed 30 plus marks. Now we are going to discuss about audit documentation. We are now going to discuss about audit documentation. Now many students are asking, what is the tomorrow's schedule? You know, you just again, I just showed you, I will just show you this expected questions PDF is there, right? Okay, here on the, here there is a link, or you can scan, or you can just click on this link. You will be routed here. You know, what are the chapters left actually now? What are other chapters which we have? Fine, let me list out here. Okay, audit report, completion and review. See, now I will finish these 4 chapters. We are now going with the live right now. Apart from that, we have what chapters? Audit report, completion and review, audit evidence, audit strategy, yes or no, risk assessment and internal control. Then we have items of financial statements, different types of entities, yes or no. So these 7 chapters were there. 4 chapters we already completed out of 11. Then these 7 chapters were there. What you need to do for them? For these chapters, I will not be taking live revision, but I will give you a fantastic source where you can really learn better. Okay. Now for audit revision, GOAT notes revision you need to do. You need to do GOAT note based revision. What is GOAT notes based revision? You go here. Here you see the playlist I showed, right? You know, enter this one, 1 lakh views is there, right? 1 lakh 1000. Inside that, here there is a playlist. You can see here timestamps were also given. You go to audit report. From here, 2 hour 30 minutes it will start up to 5.5 hours. Almost 3 hours is your audit report topic. That 3 hours you need to watch. I will tell you the times also. Strictly follow. I will tell you times to watch this. Revision time I will give you, for reading time, everything I'll give you. Right now, make a note of the schedule. Make a note of the schedule. Okay. Audit report. So tomorrow I'm talking about 12th schedule. I'm talking about 12th August schedule. You know, now this revision will be over by 10:20 or 10:30. Immediately after that, revise documentation chapter, and by 11:30 you sleep. I request you to sleep at 11:30. 7 o'clock you start again. 7 morning. Morning 7 to 10:30 audit report topic. Please, every one of you, please make a note of this schedule. Okay. GOAT notes based revision in the playlist I just now showed you. Please make a note of this. Then you watch that revision, right? Simultaneously itself, read from the book after 5 minutes. Just pause the video, in between, read immediately. In audit report revision, no, I discussed very in depth. There 3 hours I discussed audit report topic, because 15 to 20 marks weightage is there. So I discussed in depth, caro, everything I discussed. Then at 10:30, you see here the playlist. At 10:30, again, you see here playlist. I scheduled already. At 10:30, you can see audit strategy topic will be there. Some 40 minutes video. The strategy topic weightage is 10 marks. 40 minutes hardly it will be there. 10 marks. In-depth I covered here. In-depth discussion I did here. Audit strategy topic is 10 marks. Okay. Then, so 11:30 to maybe at 10:30 itself. Actually here you can finish by 10 itself. Half an hour you revise audit report. Then 10:30 to 11:30 audit strategy topic you watch and then read immediately. After that completion and review topic, which will start at 12 o'clock revision. 12 o'clock, because 11:30 to 12 revise audit strategy topic from the book. Then at 12 o'clock to approximately 1:30 completion and review chapter, which will occupy 15 marks weightage. that revision will be some 1.5 hour maximum. That revision will be some 70-75, 1 hour 15 minutes, 1.5 hour approximately. After that, read half an hour. By 2:15 you will complete this topic. Then take rest. Take half an hour sleep. I must and should request you, please, at least half an hour to 45 minutes please sleep. After that, again, audit evidence topic live will start at 3 o'clock. Okay, if possible I will schedule it at 3:15. Audit evidence topic I will schedule at 3:30 better. Okay, this will be some 1.5 hour. Then watch this entire class. Then watch this again, audit evidence topic entire class. Then read 1 hour this topic. After that, okay, now again, so 3:30 to approximately 6 p.m. what topic you will be watching? Audit evidence. Then after that, okay, some half an hour approximately you revise this. Then 6:45 or 7 o'clock to 8 o'clock, what you need to do, you know, SA 530 and SA 520 topics you need to revise. SA 530, 520. This I will upload chart revision. Chart revision I will upload at 6:45 or 7. Chart revision I will upload, which I already recorded, which is already part of chart revision. You can see timestamps already, it is there in the same playlist, it is there. But I will once again upload for your convenience. Okay, 530, 520. After this is completed, after this is like you see now what are topics completed? Audit report, strategy, completion, review. Okay, audit evidence, 4 chapters completed. Then 3 more only left. What are 3 more? Risk assessment, internal control, different types of entities, items of financial statements. What you need to do in the same playlist, you see items of financials is there, different types of entities. These two revision 48 minutes, 48 minutes, 1.5 hour both put together, or maximum 2 hours. Revise it on 13th. Revise it on 13th. After you complete audit evidence, if you don't want to leave risk assessment topic, at least watch revision here. In this chart revision, risk assessment timestamp is given, you see. Risk assessment is covered here, timestamp, approximately 40 minutes I covered. Revise this, enough. Over 100% syllabus we covered. By day after tomorrow, you are revising the marathon, you are reading from the book, and you are also considering for some topics short notes. What else is required? That's it. Everything is here. Everything is, time is sufficient. You have energy. Every resource is provided. What you have to do? Discipline. Okay. Whenever I am premiering, I will be attending that premiere also. I will also, you know, monitor your any doubts if at all there. Okay. Or you can comment below this video your queries. Whatever doubt you have, below this video you comment from tomorrow. I will reply as and when possible. Within half an hour maximum you will get a reply. Maximum I'll reply as early as possible. So literally for entire subject, for 30-35 marks I did a live here. For remaining approximately 80 marks of the paper, I am giving you already uploaded recordings I showed here. Okay, please use these resources. I'm telling you guys, you will really do well in the day after tomorrow exam. After exam is over, I will give you MCQ answers also within half an hour to 40 minutes itself. By 5:45 you will get answers also from. That's it. So now without any delay, we'll go to documentation topic. Just if you permit 1 minute, there is one important call. Okay, somebody's calling me from frequently. Just 1 minute, I'll attend the call and then get back to you. Yes. And somebody is asking MTP RTP video. Yes, tomorrow I'll upload that MTP RTP video. That is separate from all this. Okay, that is separate from all this. MTP RTP video directly I'll publish it. MTP one is already done. I'll directly publish it. That's it. Now I will go back to documentation topic, audit documentation topic. So audit documentation. Yes, yes. Just go back and see morning 7 to 10. First audit report you should study. Then half an hour to 1 hour you revise it. Then again 10:30 or 11 strategy chapter will be premiered. It will be played. Okay. Then that 45 minutes. Then you should revise. Then completion and review. That you should revise. Then audit evidence topic. That you should revise. Then risk assessment topic from chart revision. That you should revise by tomorrow night. Day after morning, different types of entities and audit of items of financial statements. Watch chart revision, then revise it. Watch chart revision, then revise it. Over. Okay, that's it. Now audit documentation. What is documentation? Audit documentation refers to recording. Documentation is about recording. Recording of what? Recording of procedures performed, evidences obtained, conclusions reached by us. So audit procedures performed, evidences obtained, and conclusions reached by the auditor. Recording of all these three is called as audit documentation, which is also called as working papers and work papers. Be careful. The next 20 minutes, 15-20 minutes, pakka 5 marks question. What is the objective? What is the objective of essay 230 in this chapter? This chapter is nothing but essay 230 standard. What is the objective? The objective is to prepare documentation which provides a sufficient appropriate record that supports basis for auditor's report. It's an evidence. Audit documentation is an evidence that audit was planned and performed in accordance with standards on auditing, and audit was planned and performed in accordance with applicable legal and regulatory requirements. What is nature of documentation? The documentation is an evidence. The nature is evidence. It's an evidence. It's an evidence for auditors' conclusions about achieving overall objectives. It's an evidence that audit was planned and performed as per SAs, planned and performed as per law, planned and performed as per regulations. Purpose. There are so many purposes why we maintain documentation. The purpose is it will assist the team member to plan and perform the audit much more effectively. It will help team members to direct, supervise and review work effectively. It will ensure that engagement team is accountable for the work which they are performing, because every team member is performing the work, he documented, no, so the partner can see whether his documentation is correct or not. Based on documentation, he can understand whether he worked properly or not. It's a record of matters for future audits. Documentation enables quality control and inspection as per SQC1. Based on documentation, firm can review that and see whether they worked correctly the audit or not. And documentation facilitates external inspection as per law and regulatory requirements directly. This purpose of documentation, nature of documentation, this itself, any of this can be asked as a 4 marks question. Next, what is the, like, look at again expected questions. Okay, look at expected questions. 4th chapter. Not 4th, sorry, 5th one. Nature and purpose, we understood. Documentation of NTE and factors affecting them. Documentation of NTE. Look at manner. How we should first document. How we should document. What is the manner? The auditor must prepare documentation so that an experienced auditor with no prior connection, an experienced auditor who is not related to this audit, but this audit he can understand by looking at our documentation. Auditor must prepare documentation so that an experienced auditor with no connection to understand nature, timing, extent of procedures that we performed, result of procedures and evidence obtained, significant matters and conclusions reached, and professional judgments made. All the significant matters, what conclusions we reached, what professional judgments we made, everything should be understood by an experienced auditor. He is not part of our team in this audit, but still he can understand just by looking at our documentation. In that way, documentation has to be maintained. Who is an experienced auditor? He is an auditor with a reasonable knowledge of financial reporting framework, accounting standard, auditing standard, knowledge of client business. Now, documentation of NTE. What is documentation of NTE? In documenting nature, timing, extent of procedure, the auditor must record. Documentation of NTE means identify characteristics of specific items tested, purchases, sales, what are all tested, who performed that work and when they completed the work, who reviewed the work, including date and extent of review. And auditor has to document significant matters, document discussions about significant matters, including what matter we discuss, nature of matter, when it is discussed, with whom it is discussed, all that. If information is inconsistent with some other conclusion, how the inconsistency was resolved, that also you document. Any further investigations you did, all that you should document. What are the factors affecting documentation? The form, content, extent. What is the format? Electronic or physical? Content. What are all you document? Extent. 100% you document. A sample you document. It is affected by size and complexity of the entity, nature of procedures performed, identified risk of MMS, significance of audit evidence obtained, nature and extent of exceptions identified, need to document a conclusion for not readily determinable information, and tools and methods used. These all factors affect nature, timing, and extent of documentation. These all factors affect form, content, and extent of documentation. You know, this itself can be asked as a 4 marks question, or an MCQ question can also be asked. Be careful. Next, you see timely preparation and assembly. Next question is timely preparation and assembly of documentation. Timely preparation. Yes, the auditor must prepare documentation on a timely basis as audit goes on. You should not document at the end of the audit. While doing audit, you should document. Timely preparation enhances audit quality, supports effective review and evaluation before finalizing the audit report. Documentation prepared after the work is less accurate than the documentation while doing the audit. Okay, next, assembly. What is assembly? The final audit file, once audit is completed, the audit file must be assembled properly and completed on a timely basis after the reporting, after audit report date. SQC 1 says firm has to establish policies for proper assembly of audit file. You know, many students will forget this point. Timely assembly, they'll write first point, third point, they'll miss to write second point. The firm must establish quality control policies and procedures for ensuring timely documentation, timely assembly. You know, for audits, the time limit to complete final audit file is usually not more than 60 days after audit report. And remember, assembly is an administrative process. Administrative process means what? Changes are only administrative in nature, like deleting superseded documents, sorting, collating, cross-referencing, signing of checklist, documenting evidence obtained, discussed and agreed upon before the audit report. These are all administrative issues. Documentation is not an audit procedure, it's an administrative. Okay, assembly is not an audit procedure, it's an administrative process. Retention. After the audit is assembled, audit file is assembled, the auditor shall not delete before the retention period. SQC 1, the firm must establish policies for retention period. For audits, retention must be not less than 7 years. For other engagements, firm policies will decide. Ownership. Auditor, as per SQC, audit documentation is property unless otherwise stated in the law or regulation. The auditor may at his discretion share extract of documentation with clients provided it does not undermine the work performed, it does not affect the independence in assurance engagement. And there is another word called audit file. Audit file is a folder or a storage media which contains audit documentation for a specific engagement. Next, documentation of significant matters, documentation related to professional judgment, and there is another one called audit summary memorandum. In the recent May 25, they asked audit summary memorandum, but still I recommend you to read once again. Okay, audit summary memorandum means what? The auditor generally prepare a summary as a part of audit documentation, where in the documentation will prepare a summary document. That summary describes all significant matters identified during the audit and how these matters were resolved by auditor. All significant matters identified and how these were addressed by auditor. Benefits of a summary. It will help. A summary can help in effective and efficient review and inspection of documentation, especially for large audits. A summary, if it is there, it can easily help us to review what all happened. It also helps the auditor in considering and addressing significant matters. The summary may help auditor to evaluate whether any essay objective is not achieved. This is important to ensure the auditor achieves overall objectives of the audit summary memorandum. In the last exam, May 25, it was asked, but there is a chance that this can also be asked once again, because summary memorandum is very important. Remember, audit documentation is having hardly 5-6 concepts. Okay, 7 concepts only there. From this only, every time they need to ask. Okay, so next. Now, documentation of significant matters. First of all, tell me whether a matter is a significant or not. It's an objective analysis, correct? Judging significance of a matter is an objective analysis of given facts and circumstances. Examples: any matter that give rise to significant risk. Any issue I found where significant risk is involved, that's a significant matter. Result that indicate financial statements could be materially misstated, or a need to revise auditor's prior risk assessment and response. Circumstances causing significant difficulty in applying procedure. Findings where auditor might modify the opinion, or where auditor might include emphasis of matter paragraph. So matters that give rise to significant risk, results that indicates financials are materially misstated, circumstances causing difficulty in applying audit, and modification, circumstances or findings resulting in modification to the opinion or inclusion of emphasis of matter paragraph. These are all various factors which will influence the auditor's judgment about significant matters. And documentation of documenting related professional judgment, significant matters related professional judgment. The form, content, extent of documentation depends upon level of judgment exercised. Documentation of significant professional judgment explains how auditors' conclusions, judgment. No, earlier I thought so and so action, I did so and so work. How I did, on what basis I did. If I document it, later I can recollect easily. Okay. Situations requiring documentation. The auditor must document judgments, professional judgment you should document in the following cases. Document the rationale when a requirement asks the auditor to consider information that is significant. Document the basis for conclusion on subjective judgment such as reasonableness of accounting estimate, all that. Document the basis for conclusion on the authenticity of the document when investigation is undertaken. That's it. These are all rationale for conclusion, subjective judgments, concerns about authenticity of the document. These are all various things that you need to document. That's it. With this, documentation chapter is done. Okay. Now, before I conclude this video, I already spoke about what are the next revisions that I am going to upload. 12th August morning, 7 o'clock to 10 o'clock, you should revise audit report, that too which is GOAT notes based. I already showed you. There is a folder, expected questions on the top link if you see, or else you go to CA Ram Harsha. For example, CA Ram Harsha, you go. Okay, open this. Go to playlist. Go to playlist. Here you see, for example, here you see, just a minute. Yes, you see here audit revision September 2025. You open this playlist. Inside this, there is 1 lakh views plus is there, one marathon is there, 80 marks coverage. Inside this audit report you need to watch. Tomorrow 7 o'clock you have to start, and put a comment below in this video. For this video, put a comment that you are starting, you are continuing from the live. Put a comment so I'll understand that you're watching after finishing live here. Okay, here timestamp, you go to audit report topic. 3 hours will be there. Solid revision I did with all drafting, everything I covered. Literally you will understand like anything. Audit report, you revise this. Okay, then audit report, you revise it from GOAT notes revision. Then audit strategy, I already scheduled it, premiering. Tomorrow morning at 10:30 it will live, it will be premiered. 45 minutes it will be there. Fantastic, pakka 10 marks from that. Okay, and completion and review at 12 o'clock you need to start. Remember, after finishing every chapter, no, read it immediately. Then go to strategy and then read it immediately. Then go to completion review, then read it immediately. Then afternoon 3:30 to 6 audit evidence will be telecasted. Watch it, revise it. Finally 5:30, 5:20 standard, because in this audit evidence which I'm premiering, which I'm uploading, in that 5:30, 5:20 not covered. This 5:30, 5:20 I will upload it at 7 o'clock. Okay, again I will stream it, which is taken from my chart notes. Tomorrow with that your revision is over. Read once again thoroughly any pending points if at all there. Read the material by night 12. Then day after tomorrow, 13th morning, items of financials and different types of entities. Morning you revise directly from my chart revision. That is enough from exam point of view. Chart revision is enough for these 2 topics. Okay, chart revision is also there here only. The first one, 7.5 hours revision is there, right? This is chart revision. Inside this directly go to timestamp, or I separately uploaded. You see different types of entities I already uploaded. Items of financials also I already uploaded. You just watch that. Entire roadmap I gave you till the last chapter. What else is necessary? Risk assessment topic I generally tell people to ignore, but only for MCQ purpose I ask you to revise chart revision. In this chart revision, no, risk assessment timestamp is there. Risk assessment timestamp, just for MCQ purpose you revise. Don't study it normally. That's what I generally recommend with respect to risk assessment topic. I know risk assessment pakka 10 to 12 marks questions will be there, but it is very tough chapter, lengthiest chapter in the entire CA intro audit. Tough, lengthy, both. 70 concepts are there in that. 70 concepts for your information. Okay, so lengthy topic. Just to revise it for the purpose of MCQs only. Risk assessment topic. That's it. I hope you are clear with the entire roadmap for the next 2 days. Okay, tomorrow audit report, audit strategy, completion and review, audit evidence, risk assessment topic from chart revision. Then day after, different types of entities and items of financials from chart revision. Done. You are set for audit. Day after tomorrow, go exam. Write well, bang examination. Immediately in the day after tomorrow evening, I'll give MCQ answers. Every one of you should score at least 26 out of 30. 26 out of 30. Only 2 MCQs excuse. Okay. All 13 MCQs out of 15, you must be correct answer. You must write correct answer. All the checkpoints I covered in these marathons. How a different MCQ can come. Everything I covered in this marathon. Okay. That's it, guys. And every one of you have really participated consistently. More than 250, 300 students consistently watched, which is actually good. I didn't expect that you'll be sticking, because no recorded marathon already there. No, many are already watching that. Okay, I didn't expect that many of you will be sticking to this also. That's it. Okay, all the very best. So I will be there for the next 1.5 day also. He will be available for you. Just in case any doubt below this marathon or any other marathon below, you put a doubt, I will reply as early as possible. I will reply. Okay, that's it. Continue. All the very best.